Excuse me. Hey, good morning, happy kid. You're always on here first. Quick. I'm a rabbit. You pop up out of the hole. This I was. Oh, CH was on first. You guys fight it out. I don't know. I can't tell who's on here. I think I was. Oh. You can't find out who's on first. Like I can't see your names when you pop up. I just see like a number like 1 or 2 or something when people start joining, and then it goes up or whatever. So I don't know. Next time you'll have to say first or something, or good morning. Who's Arca? What is Arca? ARCA? It sounds like the whale. Orca. Interesting name. I was asked to look at Mara, M-A-R-A. One of the regulars in our Discord group was asking about it, and I don't really follow everything, so sometimes like I have to get on here and it's like brand new to me, I'm staring at something. I'm gonna do this briefly, and then we'll kind of go through the main ones. I saw wasted memories. You're asking about disappointment, and I don't know about disappointment so much as just the way that the chart's moving right now. It's only disappointing if you're like expecting something huge right this second. When GME announced that their earnings was going to be on the 10th and not what was estimated, I think it was like the 4th, which would have been today. I mean, that's a pretty significant jump. There's like a week difference. And it would not surprise me if we're kind of setting up into some kind of earnings, either moving into earnings or moving after it. And it could be a drop. I mean, GME historically has run up into earnings quite often and then dropped after. So, you know, I don't know if that's going to greatly affect things, but sometimes I would suspect that it does. If there's an earnings that's kind of pushed back slightly or whatever, you could end up with some delay tactic, if you want to call it that. And I said I was going to look at Mara, but I'll wait a minute because we're just joining. So just kind of not much to say right now on AMC or GME. They're not even up a whole percent after dropping 3 or 4% yesterday. You know, I don't call things like a dead cat bounce very often because that's a weird term to me. Trying to be respectful towards cats. No, just kidding. No, but it's more like you can't really tell what this is yet. Real low volume on this bounce so far. We're only an hour into the day, but ultimately, I haven't been looking at the short term very much, to be honest. I've been kind of looking at the daily and 4 hour, maybe 2 hour. We could go down to the hourly or the 30-minute or something. If you see a breakout here, there's no reason to be hyper speculative all the time. So if this manages to jump this downtrend, and it's trying to right now, I think it's also grappling on this S-curve that we drew, and I think it's a really good S-curve. I know that we draw a lot of stuff on these charts, and it's easy for me to sit here and say like, oh, I drew it, so I think it's good. Like, that's not really what I mean when I say that. I mean that like, if we find something that really clicks very well, and it makes sense, and it has a lot of the right targets in mind, that to me is like really good. So there's others, like we have these other 2 S-curves that are not quite as good. I think that the green one that we drew was probably the best. And then the red and the yellow really just represent possible stopping points for me. So I still believe that the green one is the best one. It was the one we drew first, and it's based on the breakdown that we had on the 13th. and then the subsequent wave that would come from that. And I find it to be one of the better ones here. It's absolutely, in my opinion, highly respected. And when we talk about a wave, we're not talking about necessarily support and resistance, because a wave is flexible. So it may at times act like support and resistance, and it has. More often than not, what we find is that there's a wave within a wave, right? So you have like little micro movements that wrap around like a bigger movement. And so that is what we were talking about when we say wave. And when you do have something like this and it's pretty tight and it's very well respected, I find it to be very good, on the whole. So, it's not about necessarily being perfect. I probably made this a little too high, but you get the idea. It's about having the overall wave in the right spot. And I think this has been almost perfect. And if you look at the course of action here, it's been pretty tight. So within that wave, my expectations are not that it just follows it right up. Yeah, GME was up yesterday, Anthony, you're right. I was talking about AMC being down a few percent. My expectation isn't that it necessarily follows this perfectly, but it's probably wrapping around it, right? So at any given point, if you were to take like a bar measure and just kind of look at like the 50%, you can kind of see those motions of going from, bottom to top here on the wave. And all that's really doing is it's kind of circumnavigating the greater movement. And it's easy to think about time frames, easier to think about time frames maybe if you're confused by that. I don't think anyone's really confused by that, but if you are confused by that, think about the fact that this is like a small time frame, and then you can go up to like the daily. It looks more compressed together, simpler, less bars, right? Less candles. The data is all smushed together, but what often happens is it looks tighter. And that's because like on the bigger picture, there's a bigger movement, and this is navigating that movement. So when we were looking at this stuff yesterday, what we were talking about is a possibility that it doesn't hold here. And if it doesn't hold here, you're looking at, again, navigating this wave back to the downside. So we've got a bit of a creek now. And you're looking at navigating this wave back to the downside, potentially 50-50. Doesn't have to be that much. Doesn't have to be that much at all. It's just that that's an easy enough way to understand it since it's wrapping the wave. And that would drive you basically back down to where that gap is in the 450s. So there's no reason to suspect that that's necessarily a bad thing unless it breaks through some creeks. And as we talked about yesterday, it really wouldn't. It's only a 786 retrace. And then we looked at where that is, that green bar area. And that 786 retrace is in the 460s. It's really in a good spot. We did jump that area and we didn't touch it going back out. So after we kind of tried to advance, push the resistance here, we pulled really far back. And then when we broke out of the lower creek down bottom, we actually jumped it, but we did not test it. And there was it wasn't a great debate. It was a mini debate yesterday about whether or not it has to come back. I don't think that the question is, does it have to right now? I think that's a different question. I think the question of will it come back is a pretty open-ended question. And you could say like, yeah, I think it comes back right now, or you could say, yeah, I think it comes back later. But the idea of jumping over a resistance and then not testing it is not a good thing. And for bulls, we've historically had problems with that because AMC has jumped over resistances at times and not back tested them adequately. The sell side has not had that problem. The selling side has rarely not gone back to test. They almost always go back to test. Almost immediately. And so there's been very few circumstances where the sell side hasn't tested pretty much right away. And these walk downs are kind of evidence of that. There's very few times where it's like a gap down that doesn't come right back up and fill the gap. And otherwise, it's very controlled sell-offs. And yet when the buying happens, for whatever reason, maybe it's a little out of control. I don't know. Let the floodgates open kind of thing. I have no idea. Or what to me, I guess, seems more likely is that it's because it's institutionally driven. There's a bent to essentially achieve a certain goal. So they're creating markers on the chart, and those markers are represented by like gaps and different things and these little drop ledges and stuff. And those mark off where we might come back to for like a longer time. So Anthony, I'm glad you're here. I know last time you were here, we kind of had to spat, but I'd like to think I'm quick to forgive, and I don't want to hold grudges. Waiting for a year is a long time, so yeah, you're right. Sometimes patience is not easy, but it's also a practicable thing. So the good news is that every time you have to be patient, you're getting better at being patient, or you can be getting better at being patient. Maybe it's a better way to put it. You may not be getting better, but you can be getting better. So it's something you can do your best at and still grow in. So yeah, right now I don't know. We talked about it yesterday. I think it was JP who was like, "Hey, why do we have to go back?" And all I was just saying was that there's a historical bent for that. Like, I don't think that it's exclusive to AMC at all. The idea of just jumping a resistance and going back to test it is universal. I think we get frustrated because AMC is a obnoxious chart sometimes, because they'll do these early week runs and then they'll just kind of sputter out the rest of the week. And it's been frustrating because you're thinking it's going to take off. And to be honest, I don't want to be like harsh about it, but there's probably a lot of gamifying of that. Like we talk about, and by the way, you can do this. There's people in our group that do this. They sell the covered calls. You don't have to be on the receiving end of this. But there's people that do this, and I'm not going to advocate it or not advocate it or disparage it. I think it's whatever you want to do. It's a trading strategy. There's people that sell those calls midweek because people are thinking that stock's running up, and then they're covered, of course, so that when it's done, if it doesn't go there, then you can collect on the premium. You don't get a lot for it usually, unless you have a lot of shares. You make it $20-$30 a week or something, but maybe more. You can get a lot more if you have a lot of shares, but it depends. Those are the things that you can do if you're just like, hey, it's constantly teasing these run-ups, which has been doing. And if you had been selling covered calls for like $6 this whole time, maybe you would have made some money, at least during this time period. It wouldn't have been a lot, but you would have made something off the shares that you're just waiting on. So I don't find that to be a bad thing. You have to know that when you're doing that, you're usually doing that against retail. So I don't know if that would bother you, but you just would need to be aware that you're probably selling those covered calls to somebody who's buying them on the other end, obviously. And it's probably not an institutional trader. Anyways, so that would have been a strategy you could have employed while you were waiting. I was kind of rambling there, but the point here I'm trying to make is that this backup doesn't really pose much of a threat to me. If it backs up, it backs up, and I don't really see it as a problem. If it goes back down to like even the 440s underneath 450, it might seem really bad because you're like, well, I don't want to drop 450 again. We've been fighting around 450 for so long. Why do we have to go back and test it? There's nothing to test there. That was the argument that JP was making. I think it's a good argument. I don't think he was making that argument to be like obnoxious or something. Like, I think he was legitimately saying like, I don't get it. We've already traded this a lot. He's not wrong, but there is an issue of like, again, we jumped this creek and we really only ever faced it as resistance, and then we just kind of like leapt over it. So there's an issue that we never really faced it as support. So regardless of the fact that we had traded it a lot, we haven't actually come back and checked this as support. You can see the last time this acted as officially as support was actually probably back here in September. I'm not seeing any other time. Like, this was a breakdown. This is resistance, 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 resistance. Maybe resistance slash support right here. It's like a breakout, so it's kind of like this one. It sort of switches the flips the switch right there, but then it just gapped up and you just kind of took off. We backed up to 472, which is a little bit higher, and that was a number that kept coming up in our analysis, but yeah, we never back tested this as support. We just didn't. So I know that there's a good argument to be made that maybe we don't need to. We've been trading down there for a while, but I think that's probably the most important. I've talked about this before, but the 460s are like the most important support that we have. So I don't personally think it would be wise to not test it, because you're looking at a potentially weaker run. So one of the things we talked about as well was the fib extension. And let me just demonstrate what I'm talking about so you understand what I'm saying. So there's not really much to go off of here, because technically this kept making higher lows, but there is like a double bottom. So you could use that as like the first wave. If that is the first wave, and typically the second wave is like a 1618, then this goes to 554 on a wave 3. Now, could we be in that mode right now where we're doing like a 1, 2, 3, 4, 5 as part of a wave 3? Yeah. And we actually did I think we did this once, but I didn't save it. We did an Elliott wave on it just to try to see if we could figure out what it would be. And I did all the measurements and everything, because what this is potentially is a wave 3 that could also have like a 1, 2, 3, 4, 5 inside of it. So that would be like a 1, and then you would have like a 2, 3. 3 might be over, and then you'd have like a 4, 5, something like that. And as long as it's not the smallest wave, it can be whatever. So I think wave 2 to 3 is already bigger than 0 to 1. So I don't think there's a problem here. So really 4 could be whatever, you know. It could potentially be kind of choppy for a bit. This is why I'm wondering about the December 10th thing. And then it could just kind of pop up in an extended 5. And that would be a way to get a move to 554. The issue that I have with that is kind of obvious, hopefully, that you are aware that that is not high enough for an SOS, let alone even close to the other targets that we found up in the higher 6s more recently. So, like, that's one thing, right? If this, on the other hand, does not count as, because it's a double bottom, I think you could maybe count that as wave 1, 2, and then 3. But what you could do also is you could count this all as wave 1, and if you come all the way back down to like 440, it might seem really bad, right? Or even like not quite that far, just going to the gap. I think we did like 443 yesterday. There was a reason for that, but I don't recall why exactly right this second. But let's just say it goes to like 450, right? So it hits max pain or whatever. So this might seem bad, but in theory, like, this could all just be, again, one move. I'd have to kind of venture that it'd be here rather than up there, but because of that double bottom, I don't think it would be the full thing. That goes really far up. It's like 680s, but I think it would be like here on that double bottom. So I drew that wrong. So this is an alternative, and this actually goes to 642. So right in this 640 pocket. And I think we drew this out yesterday, and we were looking at how there's like a gap zone that was built on this ledge at 670. Now that gap's been filled, but it's right in that pocket. You can see that fib extension's like straddling that gap zone. That to me would be a key institutional marker, as would this one as well, which is the 1272 here and the 1414, and those are right around this straddle as well. So this looks really good to me, but what this would require is it would require that we actually do the retracement. And some people don't quite get that because they're like, well, why would that build strength? Again, it's the idea of like back testing and the impulse. It's just probability statistics, like the way that typically we move. So in the case of an Elliott wave, it's actually stronger for us. We get a much higher extension, like a much greater extension, if we go lower right now. Sometimes you have to go down before you go up, just like sometimes you have to go up before you go down. So coming down to build a like a support low might seem obnoxious and like a little bit more like, well, great, we're just kind of spinning our tires in the mud. I agree. It's not ideal, like in terms of like if you're just trying to get some money out of this really quick. It definitely is annoying, right? We've been doing these kind of massive swings. But at the end of the day, if it holds, it's actually a much bigger wave 3 with a potential for a bigger wave 5 to then follow. So the idea there is this could be essentially the wave 5 at the end, and you could get a bigger extension. So quite simply, like it's almost what I have on the chart already. This would be like a wave right here. This would be like a wave 3, and then you'd have a backup for 4. That would be a little more long-winded, and then you could break out again. Now, I'd have this going out into like February or something, but who knows? That's kind of anybody's guess. This is basically around Christmas time, and then it starts kind of selling off. Maybe you get a second wind in January, and it pushes up again. This was a little bit like what we talked about in the stream about 2 weeks ago where we did the alternative view. It's pretty similar to this actually. And it falls in line with expectations. Quite frankly, just being blunt about it, there's really, aside from like what I've done in my analysis with the 869 target, which I still think is a possible target, the problem with this whole setup is that there's really no reason, if you're going to go back down, there's really no reason. I know I've said like there is a good reason. You guys are like, there's not. You said there was a good reason. Now you're saying there's no reason. You're flip-flopping. I guess what I'm trying to say is like you don't have to go to 869. You just don't. And when we were doing the analysis, there's plenty of reasons why you would do that if you look at the gap zone and the way that AMC typically does double flushes in terms of the measurement up and up. And then the fact that this met up with other things was really significant for me. So I find that to be still a compelling target for upside. And you're like, well, upside targets just keep getting lower and lower, Booksy. You know, what about the 13s? What about the 12s and 11s? They're still there. I just don't think that's where the actual supply is. And we were talking about this yesterday. I just think that there's not a need to go up that high anymore. If you're going to come back down, there's just no reason for it. I'm not saying it can't happen. I just don't think it will. So there's that. There's absolutely like a good reason why you would come up to maybe 869, aside from just the fact that we found it as a really good flip target for like a double flush, and the fact that it hits like a really long-standing parallel coming down that would be significant. Those are good points. High interest, right, in that zone. But the more we looked at the actual supply and the way this set up, we did this yesterday. It was a very light stream yesterday, so I'm not going to be able to go through it all again. But if you've missed it, you could check it out and just kind of scrub through it if you want. Basically, it was a comparison to sort of what happened in 2020, but also like where would this be if it didn't shift down? And there's a lot of interesting points to be made, but basically like this 2050 region would be the most likely resistance coming up, and that translates to, in the grand scheme of things, it's the midpoint of, so we just did a literal like percentage shift. It's 1-to-1 in terms of like distance, and then what we found is that that actually correlates to this middle like perfectly. That's the $6 target. So for us to have that as our understanding kind of changes the game a little bit, right? It makes it so that this build out isn't really happening if you think about it in those terms. And I know it's not quite accurate. I don't want to get into like the nitty-gritty math of it, but really what this is and what this would represent is a long-standing, probably a downtrend, like way over here or something like that, from like way back. So it would be like the original bottom in March to the spring. It's a low downtrend. Yeah, and then this would be like a sign of weakness right here. Like we're going to try to push lower maybe, see if we can go below the floor, below that trend. It builds support, breaks out, and we come back down. Really, for gap filling, we're just going back to that floor again. It could just be to confirm, doesn't have to be to go lower. A lot of that just adds up to being quite the same as what we've talked about, which is going back down to like 280s, 290s. So it's an interesting juxtaposition to kind of move it back up and see how that would interact if it hadn't shifted the amount that it did. And that measurement here from top to bottom and then top to bottom is it's quite like precise. So I'm pretty confident about that as a measuring tool. But anyways, my point being that like in the end, that might be a bit of a difficult argument to make anyways, but we were saying like there's already support for that idea. So even though Jim Cramer is not popular, he was saying like if it gets to 6, sell it. Well, he may not be completely wrong, because this area is going to be a supply zone. It just is. It's not complicated. And there's a lot of reason why it may not need to extend beyond that point, right? We don't really talk about it very much because it's maybe not the popular opinion, but when you look at this big picture and you just look at it as like a massive potential S-curve, maybe it's really wide, right? I don't know. It takes a long time to get down there, that kind of thing. We were originally doing that back here when we first came up. We were talking about like, well, what would an S-curve look like? And we were measuring it down. It measured to like 2 and 3 and all that stuff. If you take a big picture and you go to like the 5, maybe as like a middle, this definitely looks like an S-curve down to 2. There's no arguing it, And I just took it to the 485, which is my popular number to use. I still think that's probably one of the best ones. It's kind of where we are right now. And that takes you right to 2. So for me, like an S-curve may be unpopular, and you may be thinking, well, how can it do all this and still S-curve? I don't know. Maybe it can't. But the idea of an S-curve is not exactly linear either. You have swings around those movements. So in the case of like an S-curve down to 2s, which is, again, you might be like, why are you going off on this, man? You always got to go like bearish. Well, this isn't bearish. This is just me being me. Like I've been doing this for a while with this idea that we're going to come back down, right? So like I don't find it to be disconnected from anything else that we've said before. I think the challenge is that if you use this, is knowing like what could happen here and how that would interact with a low. And so my argument has never been that we are going to just take off and go, as you all know. By this point, it's always been that we would probably push up and then flush down. So what I was doing is I used like the 869 target, and I was saying like it's a really adequate way if you look at the bigger wave, which goes this direction to the upside. I know, keep adding stuff, Booksy. That'll help. Jeez. Yeah, that'll help, Booksy. Just keep adding lines. If you look at the bigger move, this direction, the 50% on this drop would get you down to the gap zone. So the reason I was looking at 869 in part was because it's a really simple formula for like pump and dump. So even though, again, it may look like, hey, that doesn't make sense. Well, if you think about it, it kind of does. It just depends on the way that which we're going to walk down. It's the same concept we're talking about right here on this S-curve, this green guy. If you want to go down, sometimes you go up, and a lot of times that's a swing around a bigger move. So like right now, I don't know for a fact, by the way, that that is the S curve. I just doodled it real quick. Um, we could probably figure it out. But one thing you could look at, again, in theory, is just, all right, well, how far did we go below that middle? And then where would that take us if we kind of wrapped around it? And it'd take us to 594. It's a 6. So like the swing down here and the push up, you could think about it like a yo-yo, or you could think about it like a slingshot pulling back and then going up. Yeah, I mean, like, it's an adequate target to say 6 is reasonable. Everything else around it, these both just kind of like wrap around that target. They look like they're kind of equal parts around it. So the idea of this kind of only going up that far isn't that unusual. Now the rest of this is a bit speculative, right? But in theory, if it only went up to 6, and you're up here, like basically right at $6, right? Now you've got a ridiculously big flush, and it really just depends on, again, like what you think about. But I would go to like this intersection here at the place where both intersect roughly, and that would be a good adequate like flush. That would take you down to 330s, you know. So like the reason why I'm not sure if we actually need to go high is because technically, if this is an S curve and this is just trying to push up and pump back through the main wave, I know it's a lot of interaction here, but there's different time frames, right? So this is actually, one way to think about this is a massive pump and drop through. This S curve is just a massive pump, like a double flush, like go up and then down, right? We're going to absorb all the buying, and then we're going to sell it back down so we can go back to the floor through the main arc. And then you can think about the micro versions of that going on down here. Like this is a drop with a push back up, and then this is a push back up with a drop back down. All of that stuff may seem a little theoretical to you, but to me it's like pretty straightforward. Like if we go back and we measure stuff out in the past, it's almost always this is the case. So yeah, in theory, like this doesn't need to go super high if it's going to be a really controlled move down, right? I think one of the things that we might get a little annoyed with, as we should probably, is this idea that why would it take that long? You know, it's always going to just bleed down for months and months and months. Well, I mean, it might. Some of these walk downs, like we had them in the past over here, it took a really long time. And if you think about this as like that stiletto move, right? It's adequate to actually kind of apply the same thing to this bottom right here. Like there's likely going to be a moment of a big drop, and then you're going to have like that stiletto action again with the big rise. I think that long term, okay? I think that long term you're going to be able to see that iteration play out. So here's what I mean by that. So like if you were to look at this, let's just say in theory, this is hypothetical, okay? We're just going to pick 6 because it's easy number. Let's say in theory it goes to 6, doesn't go any higher. It's kind of a bummer, but whatever. That's where it goes to. And then it has this big flush to the downside, right? And then it starts doing this build out, much like we see here. All right. So again, in theory, that's what it would look like, because it's just a bunch of LSPYs until it no longer goes low. So after that first drop, you basically iterate the same thing, right? Back to the downside. Probably doesn't go, I mean, this is debatable because whatever, but it probably doesn't go all at once. My guess is that by earnings, there's some kind of a pop or something. This would make sense to come down here and then pop around the gap fill. And that, to me, is where I was thinking we'd be at around earnings anyways. So most of the charts show that as a likelihood, right? So essentially, like, this is what you would maybe expect. And then I don't know what happens down here that causes another drop. Maybe there's a pop, but it's just not very large, and then it kind of like sputters out again. But you're seeing how like that is very similar to what we already experienced, and then this would go back down probably pretty low, you know. And I don't want to like presume too much just yet. about direction this far in advance and how it might travel. But in theory, maybe there's some kind of another offering or something. I don't know. Or it's just another breakdown. Who knows? Okay. Point being is that you get some kind of reaction here, and then it goes down low. And then this move ends up being like a larger move off the bottom. And it could be that that's the earnings move too. Like, again, I'm kind of speculating here. This is more in line with what we expected originally, which was kind of like that March move would be higher. So if it's right here, then a lot of this maybe would be presumed like earlier. Like you get that stiletto kind of action early on. Yeah, it'd be bigger than that. But then you get a big reaction right here, and then you do it again, so on and so forth. That's the case for like, we don't go much lower than 280s, because then if it did it again, it wouldn't really go down as far, or it would be like difficult. And that starts looking a lot more like 2020, where you get like a big reaction back up to near 5, right? And then it chops for a while, and then it dies again, and it goes a little bit lower. And that starts looking a lot like that 2020 model, where like there's a push up, then there's a sell through, and then there's a backup, and there's another one. And that's exactly what happened in 2020. Hit the gap, bounced, yada, yada, yada. And then it's just like a big delayed action going into May. And we did this already, by the way. So if you're like, again, this isn't anything really new. And then the idea is that it could then run in like, potentially run in as early as like June or something like that. In theory, it doesn't need to run up until much closer to, I want to say September. It's like, that's the date. Yeah, September 6th. I think it's a 2-year cycle or something like that. So I think September 2025, because it was a 2-year cycle for in 2020. And then we had talked about probably would hit the first high here around June 27th. And then it would end up backing up, basically looking a lot like what we saw in the January run up. So this works. This would be an adequate move. So I'm saying, like, what I'm trying to say is that there's no one size fits all for this. Like, you can kind of look at it a number of ways and determine, like, this is probable, this is not probable. But in any case, you know, what eventually we would be doing if this makes a high here is we would be taking that and we would be using that for a potential target later. So like, this is exactly kind of what we were thinking, is that might come up to 650. Well, look at where that puts us, you know. Then you can take that flush value, drag it down, pop it back up. It probably comes right back to meet, and then it just drops again, right? So there's a lot to this. You know, we don't need to go into every little nitty-gritty detail, but we could if we wanted to. Like, we could take this and say, what's the 50-50 of this top? Does that match? Yeah, it matches. So does this work structurally to get you? Yeah, this is typically what our algorithmic trading does on AMC. Love it or hate it, doesn't really matter. This is very, very common. What we see on AMC is like a big pop here, then a flush through, like a 50-50 flush through to get through this level down to the bottom, and then you get a reactive move off of the gap down here, right around earnings time or something like that, and then you get this big pop. It's about equal parts as the first pop. That takes you back to kind of the liquid middle, which is at 485. It's also the center of this bigger S-curve. And then you get a drop down low. You know, in theory, you can see like my S-curve goes way lower than that. So like, why wouldn't it go down to 2, all the way to 2? It could. You know, I don't really know how this moves from here to here. If it's wider, for example, or shallower, you know, this could be much steeper. So there's not really a one size fits all for this either. It may very well be that this doesn't come up as high. I'm kind of like extending it out. It could be something like that. Then it would be like a lower hit when it flushes down or something like that, right, into May. And we would look at this and be like discouraged at first, except that I genuinely think that this would be the result later. So those are things that I would be looking at in terms of like a wave. Does it match what our expectations are for potential waves? Does it give us an adequate check of the levels down here? Yes. Does it trade the liquidity between 350 and 415? Yeah, quite extensively trades around it. And then does it ultimately trade below the bottom, below 285 down to like 2? Yeah, right here in the final kind of build out. All of those things to me would signify higher probability. Like those trading zones that are being met with that particular model just look better to me. So yeah. So anywho, we've been doing a lot of different things on this channel over the last couple months. Part of it's just waiting game. We're not really in a mode of, hey, we got, we got to hurry and figure it out. Like, it's really been a lot of patient, like kind of just working through different models, understanding the way AMC likes to move. What's the most typical thing that happens? What would be the aim of operators doing this or that? There's always the oddball kind of scenario. We threw out a couple, like this one was kind of an oddball scenario. That would be a really late dive. If this goes up into earnings, you can see it's quite opposite. This was the one that we did based on July of 2000. And so this is more of like that wave 5 that pushes up higher. This could even get you all the way up technically to like the 860s, and you might need it if you're going to drive the price really low, because this wave expires at a certain time. Yeah, suffice to say, like, it's not purely academic. We're trying to do our best to determine what we would see as like the most likely scenario based on certain probabilities, right? And certain things that happen on AMC almost religiously, like they're just very, very common. And this kind of stuff right here, driving the price up to try to like flush back down, is then demonstrated again by, the flushes within the flushes, so on and so forth. So it may seem a little bit like confusing, I guess, on the get-go, because we tend to talk around the same points a lot, and I'm doing like different models like every other day, but most of this has been mostly the same lately. Unfortunately, I've been dropping my targets like constantly, and I'm aware of that. So if you guys are like annoyed and you think that I'm just like, oh, I don't care. Well, I do care. Like, I'm not happy that the targets have been shifting. If we're only going to get a pop to 6, it's kind of a bummer. I'm not going to lie. But one of the things that I heard like a couple years ago or whatever, and it's just kind of like been burrowed into my brain at this point, is if you're going to chart, you need to chart what is, not what you want there to be. Like, what does the chart actually say versus what do you want it to say? And those are two very different things sometimes. So if it were me and I were just charting what I want, I would be going to 1380s, because that originally still looks really good to me, to come back up to the top here and make a higher high. And that would be a phase B top. But at this point, it's late in the game. We missed some of those windows, and I still think those windows were really important. And so that's charting what is, not what you want there to be. It's not impossible that this goes to 860s, but I'm still favoring now the 650, 660 mark for a lot of reasons. So, yeah. So I'm not happy about that, but if you go back and you look at those moments where maybe you held on too long, or you were like thinking something else was going to happen, so you didn't read the chart, those are almost always the times where I've like lost money, or I kind of want to say regret it the most. Maybe that's not the best word, but like I just do. It's usually because I just refuse to think. It was like I had something in my mind, and you just keep thinking it's going to turn around and go the way you want it to go. And that's a bad place to be. It's not healthy. So yeah, I'm not a big fan of that line of thinking at this point. I think it's dangerous for yourself to assume that it's going to just kind of keep going, or, flip the direction you want it to flip just because. Just don't think it's a good idea to do that. But that's almost always the time that I feel the most like, man, I need to like be a better trader. Like I need to stop trying to cross my fingers and, you know what I mean? Just read the chart as it is, let it be what it is, and just take it for whatever's going on is going on, right? If it doesn't go, it doesn't go. You need to be able to see the top. So I would think, and I know you guys do appreciate it, I would think more people would appreciate it because there's been a lot of false tops in the last 6 months, and it would have been really easy to think every one of those was going to break out. And we've been pretty cautious with that line of thinking. We really have. So, for what it's worth, I think it's a really wise, I'm not saying I'm wise, I'm just saying for what it's worth, it's good to be able to see that change of character and to say like, hey, it's not doing what we thought it was going to do. So, short Fridays. So is Jim Cramer right telling us all to sell? Look, you don't have to sell anything that you don't want to sell. He can't, I don't know why he would tell you to sell. I think what he's trying to do is just suggest to you that that is probably a top. And I know that we've talked about this before. I don't personally think I don't listen to Jim Cramer. Like, I don't follow him or anything like that. This is not me like supporting him and his efforts to do this or that or whatever. I don't know the guy. I don't know what his intentions are. I don't know if he works for somebody. I don't know if he just wants to help people out. He's flip-flopped a lot on AMC. In the beginning, he was like basically like an ape. I mean, he was for a little bit. But I think part of that was just publicity, like hopping on a bandwagon. And then when it no longer went his way, he was like, yeah, I can't support this, because he's getting credibility torn apart by saying that this is a good trade, yada, yada, yada. Okay? That's as far as I've ever thought about it. I don't care who says it. I looked at it as, is that likely? And frankly, it is, because there's a lot of potential resistance here, supply here. So I don't care if you don't like the guy or if you want to play inverse Jim Cramer or whatever. All I did was look at the claim that 6 is a potential supply zone, and it is. You're just kidding. I'm just taking you seriously. I have to assume that people are being serious. I do appreciate the super, though. It means a lot. Christmas coming up and stuff. It means a lot to me. Thank you. But yeah, I mean, I just took it as, okay, he might be right, because there's technically a big sell zone right here. It's very possible. And when we did our S-curve, this was quite separate from Jim Cramer. Like, we didn't do this with him, you know what I mean? Here's where you're going to know if you're kind of curious, like, well, so what? Do I listen and sell if it gets there, or do I hold and or buy or whatever? It's not that complex, right? If it goes to 6 to 650, then you're going to have a 566. Yeah. Well, and that's another one of our levels is 565. So it's there. But if you got through 6 to 650, the question shouldn't be, is it going to continue? The question is, the question is it going to continue? Not, it definitely will continue or it definitely will break down. It's a question mark. If we are too quick to judge, we're going to miss the question. The question is this a SOS, right? Or is this a sell-off? And we've seen these, I don't know, dozens and dozens and dozens and dozens and dozens of times. When it gets to this point, if and when it gets there, you're going to take a look at that and ask the question. That's what it means to be a good trader, in my opinion, is like we now have a target in mind that we're still pretty confident about. That's the risk. The risk is it's jumped the creek. It might back up a bit, but it has a really good chance of getting to 570s all the way up to 650s. That's great. You've got a trade in mind. You have to take a risk at some point or you're never going to make any money. So you can do whatever you want to do, but I think this is the risk. It's a 30% plus trade. That to me is the trade. But once it gets to that point, then what happens? Well, you're either going to SOS or you're going to distribute, and they're very tricky. You know, they often look really similar. An SOS that's really healthy looks like the one we got on GME back in May, where it basically makes lower highs, higher lows, and then it breaks out and does another little mini SOS and then takes off. That's what an SOS typically would look like in this situation. The problem is that there can be what's called an SOS with a backup, where you get an SOS that is an SOS. It is a sign of strength, meaning that buyers are going to go, but then they back up. So sometimes what that looks like is that you get almost a distributive action first, like a spring, and you back up to like a creek. Okay, well, how do you know the difference, Booksy? You kind of don't until you see the end of the pattern. You can tell by only a few things. You could look at something like RSI, or is there a divergence? You could look at, is there weakness, right, in the volume? Is volume dropping while it's trying to rise? That's a weakness, right? You could look at on balance volume. There's all kinds of indicators that could help you determine maybe where are those moving averages. We've talked about that 180. It's up here at 6 now. 180 on the daily, and I think it's a 4-hour rather. I don't remember which one it is. I want to say it's the daily one. I think the 4-hour is really low. We're right above the 4-hour. Backing up to it would be like the 460s. No surprise there. Be coming back down to here to check that 4-hour jump. That would be really strong to back up to that. But I think it's on the daily. It's actually all the way up at 6 now. Yeah, it's right here. So you could see why that would be a problem. Last time we pushed above it a little bit, and then we sold through it. So same deal. It looks like the same exact setup. You could push above it a little bit, and then you're at risk of selling through it. So you look at volume. You look at, we've talked about distribution versus accumulation quite a bit. The biggest signposts for distribution are high volume top and sell-offs, followed by really low buy-ins. Usually it looks kind of anemic. Usually there's a sign of weakness in there, meaning it like starts moving low early, right? You might get like weird latent upthrusts. It's possible, but then you end up crapping out. And that's it's really intuitive. Like you just have to look at it and interpret it when it happens. So there are signs. It's not completely like shooting in the dark, but I don't want to boast about many things, and I think that would be really stupid to boast about a lot of things in life, but I have been pretty decent about seeing the tops. Like, I don't think there's many tops in here that I haven't seen since we first dropped down in September 2023. Like, I genuinely don't think I missed a top. And I know that's a big, big thing to say, but I don't think I have. Like, I'm genuinely like, thinking back, and I'm like, I don't think I've missed a top. I think this was one that I thought was going to break out, and then I thought it'd pull back to 9 and try again, and then I called 6 here, and it went down to 6. And I didn't feel like it was going to go because it kept closing beneath the top. It just looked weak. It looked like a distribution. Same thing back here. It just failed to advance, and it was piddling out, and it was doing these massive upthrusts with low bottoms. Same thing here. When this pushed up, same deal. I was like, oh, I did
think this was a top because of that 100% gap, but that's easy to identify. There's no boasting there. I think a lot of people hopefully caught that. I got out at like 1050 or whatever that day. And I thought this was a top, looked like a distribution. This one was a bit weird. I remember thinking like right here, this might be an error perhaps back in June. This is just like a resume for you guys. But this is maybe an area where I messed up. I remember thinking it looked like a top, but that there was a possibility that it came and did a spring. It ended up doing kind of that, but to get higher, but it went a weird route. Once it got to this breakdown, I think we got it right from there forward. So this was kind of a mixed bag. I definitely remember thinking that June 7th area was a top. I was hopeful that Roaring Kitty would push it up again because of the after hours move, that we would get to see that. We never got to see it. But I remember getting out of most of my positions and even telling everybody, like, I'm getting out of those positions. This area, I was hopeful again. I knew it was a problem zone. Hopeful it would move, but when it was a top, I said it was a top, said it was a top, said it looked distributive, all three of these. Don't remember this at all. Don't remember this at all. Maybe we got it wrong. I don't remember. So that's a possibility. I definitely thought this was a top when it pushed to 520s and then dropped below. Didn't look good. Same here on the 13th. Failed to advance again. Called out a lot of that price action going through there. So on and so forth. This whole area has been a big fart, but you know, I don't know what to say about this area except that it kept closing beneath so like every time it closed beneath on like the weekly or the daily, I was just like, that's not good. Well, you don't really know what's going on because of the massive flushes, so who knows. It just had to keep holding bottoms, and it did. And technically, I thought we were more on a bottom than a LSPY, that we were just going to pump up to here and drop. Didn't seem likely to me. I've been talking about going back up. So I've been pretty decent at identifying the tops in the last year, so I'm not super worried. If it gets here and we see it topping, I think we're going to know. Like, they haven't been disguising it very much, is what I'm trying to say. That's not to say I couldn't get it wrong, but you have to have some confidence in the market. So at least lately, I've been pretty decent about calling out bottoms and tops. Continuation is where things are always really sticky. It's like, when you see like a possibility to go forward, you can't know until you get there. And that's where things have been rough. And frankly, there really haven't been a lot of opportunities except for here to make a huge amount of money back in May. I mean, this has been a really rough chart for the last year. So aside from some 30% swings every few months, there's not much here to talk about. You guys are like, 30% swings every few months is great. Yeah. If you were capitalizing only on those swings and you were able to get in and out at the right times, you'd probably be doing really well over the year. You would have had to trade both sides most likely to make good money on this. So anyways, point being, when we get to this point, we're going to be passing above that daily 180 just like we did in May. I think much the same, we look at that 869. Again, it's like, why would that happen? Guys, it's just like, it's exactly what we've talked about before. It's a 50-50 around 6. The setup here is like basically perfect for either one. You can stop here, or you could have an SOS and advance to 869. So we're going to have to just kind of wait. I mean, that's all there is to it. I do not want to sit here and say it's definitely going to do this or it's definitely going to do that at this point. I think that's silly. We can make a case for 650. We could make a case for 869. Period. I'm going to draw a line in the sand at this point and say I think it's probably like 60-40 in favor of 6. But I don't think that I could tell you for sure. 40% chance is still 40% chance. It's good enough for Weather Channel, You're forecasting. Boy, but see, you know how to talk circles around a topic, don't you? Yeah, it's unfortunate. I'm not trying to. I don't try to belay the point. I really don't. Or delay the point, whatever the word is. It's just that sometimes it takes a minute and I have to think it through. So, a lot of questions about GME as well. Honestly, I know it sounds silly to say this at this point, but it's basically the same as it's been before. I don't know what's changed. I keep getting asked about GME like something has changed, and I don't think anything has changed. So there were two main targets in mind. One we've already hit, like this is pretty much perfect. Like we hit that 31 area, and that was what was expected. That we might have an extended move. I said extended hours, but whatever. I wasn't sure what was going to happen here. So I just said, that's an extension to get up to like 3080s. And we did. We hit 3085. That's where we broke down. I gave you guys targets back here on November 7th before the move happened, and it played out pretty well. So in this case, what remains then was what was anticipated was a backup to near 25, and then potentially running up again into earnings at maybe at most like 37.50 to 38.50. I don't think anything has changed. So like, I'm not going to keep this stuff on the chart forever. I'm going to go ahead and get rid of it actually. It's time to let it go, Booksy. Because what this represented quite simply was the advance to a particular supply zone. I'm going to switch to this chart only. This is a little bit messy. That we were at back in, I think it was June. Yeah, June 12th. And we're just revisiting that. That, to me, was the triangulation right here. It's been consistently going up and testing this max liquidity move, or excuse me, this maximum trajectory. So if we want to, we can kind of like make that a little bit bolder so you can see it. That's this guy. Make it like super bold. We've been consistently going up and hitting that one, which was the final trajectory, which is the one that typically is the most used anyways once the move gets started. All these others were interpretation trajectories, and we were talking about how this is like waveform 101 kind of stuff for me now, is like where the bull's trying to go before they break down and then they fail to go. And so you get tops, bottom top, bottom top, bottom top kind of stuff. And those layups form trajectories that are showing you direction. And it's essentially perfect in this case. Perfect, because it does go almost perfectly. I mean, it was not even close to being slightly off. And I think that's amazing, because sometimes on GME and AMC we get really frustrated because it's like, man, this is not working, or like all these setups don't work out. They do work out sometimes. You just have to get the right number. Like you have to do the right thing. Like it has to be the big picture. It has to be do the right thing. A Spike Lee joint. You guys are like, what? It's a movie channel. You should know that. But the idea here is that, yes, like this ultimately hit right where it needed to hit. I mean, it's almost perfect. It's a bit of a chop going into it that kind of worried me, and we did get a pullback. And this is talking in retrospect now. But like, ultimately, look at where that intersection is and look at where that met up. This is the power of waveform analysis when it's done perfectly right and you get the triangulation right. It's very precise. Very, very precise. Like scary precise. Like it shouldn't be that precise. But for every waveform analysis, for every trajectory that you do and the triangulation that you do, there's one that won't work out. And so you have a problem of like confirmation, right? And confirmation was really the breakout here back in October. And then again here in early November. Like those two breakouts were the most significant moves. And then by that point, you're probably annoyed because you're like, well, half the move's over. Yeah, but there's nothing else you can do about it. You could have bought in here when it broke out at $22 and then retraced again to $22. You'd have been in a good place to make some serious money. You know, like there's nothing wrong with trading from that back up to this top. That was a 30%, 30.5% move. Yeah, there's been other moves like that, but that in and of itself probably had the biggest jump in IV and all that we've seen lately. And ultimately, like that's the triangulation from this build out down bottom on this lower wave. So in theory, you might say, much like AMC, why can't we go back to those higher levels? Well, remember, AMC, if we're looking at this realistically, may only go to like sixes. It may just push above this top from back in on the 7th of June. If you look at GME, that means that there's a possibility this could go to like 50. You know, if you were just doing it proportionally, you could say, sure, it could go to 50. It's not impossible. I'm sure there's a target up here. The issue that I had is that there's not another precedence for it. Like, aside from just coming back to that level to retest it, I went back and looked at where the actual major macro trend is. It's right here. And this parallel system that I drew earlier might seem a little weird because it seemed like a nothing thing. Like, where did that even come from kind of thing. I think you guys are like, I don't even remember where that came from, Booksy. I genuinely don't, but here's the thing. I don't delete stuff unless I'm like sure it's not useful, and I was pretty sure this was right when I made it, so I just kept it on the chart. And I'm like, I feel stupid now because I can't tell you where, I just can't remember. I cannot remember where this parallel came from, but I think it had to do with the earliest analysis we did, which was a comparison to the 2021 top. And we used certain triangulations, and then we did like mirrors of those. And this is what seemed most likely projection-wise. And it's right. It's correct. I mean, it intersected this projection. So this was there for a long time. I've had these on the chart. If you go way back, you'd be like, they're just floating up there. There's nothing going on. These are my estimations for basically where those triangulations happened. So one of the issues that I have is that there's not really a precedence beyond December. You can see it kind of stops right here on the 30th, that triangulation. There's not really much of a precedence to go beyond 38. So I was looking backwards and saying that I think these are the two key levels. It's not actually this high. So it's a bit frustrating because you might be thinking, well, I don't see why it wouldn't go over the top if AMC goes over the top, because AMC follows GME. Like, that's what a lot of people say. But that's not really true either. If you look at them proportionally, yeah, like move-wise, they're kind of one-to-one. Like, they'll move at critical times at the same time. But you look at where they go, it's not even close to being proportional. AMC's historically at all-time lows right now. GME is not. You know, it's not even close. So to say like they have always moved together would be silly. Like, that's just not true. Have they always had directional influence on one another? Yeah. And probably a lot of that comes from GME. I don't doubt. Towards AMC. Like, that's the main directional influence. Okay. But to say that they're somehow one-to-one would be silly. They're just not. So like sometimes one of the best examples is what happened in June, which by that point GME had already finished its run and it didn't ever make another high. And in the May to June run up on AMC, it did. Both had a big run there, but AMC goes significantly higher, right? And then vice versa is true. When it came back down, GME never broke very far below, original all-time highs. You know, if you look at the chart on the whole, it came back down. It didn't go to lows, and AMC did. The swings on AMC have historically been bigger, just in general, like in terms of proportion. I'm not talking about the first big run up. I'm talking about everything else. So like when you look at it from a helicopter view, you can see that. And yeah. So on the whole, I would say that on average, it does make sense to me that AMC might actually go up to 6s or 650s and GME might not go that far. So anywho, I do think there's a possibility. You know, we've got the high targets of 65. You got another possible target up here at 48. But on the whole, I've been favoring this target for a number of reasons. I think this is like a midway point. essentially on a move, like just a quick upward move into earnings. And there's a lot of trajectories that match. So I have a pretty strong feeling that this is what's going to happen. I did not know, and you might look like I cooked the books here, that this was the 10th. I did draw this out the other day. I didn't think it was going to go into the 10th. I think originally this looked like it was like the 4th or something. So I had thought it might come down into earnings and then pump again, or just continue up right here into earnings. So this is a little bit different because the earnings was announced like a week ago to be the 10th. It's about halfway. If you look at that motion here, it's about halfway. So I think the operators, they gave it some space to move. So I wouldn't be surprised if this does have kind of like a pre-earnings run up and gets closer to like 39s or something before the end, or 40. Remember that short guy? He said he'd be back when it hits 40 to 50. I think this is the zone he's talking about right here, that it would come back up. I think he's looking at this like it's probably going to retest in like a UTAD kind of thing if it is going to sell off. If he's short on it, he would look at that as like the next zone. So he had already kind of identified for us $40 to $50 right here where that supply zone was, which is where his entry would be, like as a short. Why did he do that? I don't know. You know, some people are like, he's just doing it to trick us, Booksy. I mean, maybe, I don't know. You can doubt whatever you want, I guess, but it is a supply zone, so I don't really care if the guy's lying or not. He could be bluffing, double bluffing. Who cares? You know. Point is that's been a pretty likely target for a while. So I don't doubt that we could get there. And the fact is that this triangulates almost perfectly, like just like the other one did right here, where that intersection is. This triangulates almost perfectly to like right after earnings. So I don't think it's a huge guess. So what I'm saying is that I do think that GME may have another big push. That's the remainder 50%. It almost literally looks like a 50% move too, which is interesting. So these are things that when we look at as an S-curve, I think that's a very likely possibility, right? You look at the middle of that motion, the triangulation that happened here nails it on the head, but then the rest of this would be, and I have this kind of walking back through these invertedly, and I think that's probable because in the past what we've found is that a lot of times on the opposite side of the trajectory, they're building out above them. They try to build out above them, and if it doesn't go, then it fails by using them. It's the same trajectories, like because these are built-in supply demand lines at this point. Does that make sense? So when I look back on it, it's not unusual, I feel, when we've seen this in retrospect, that if this doesn't hold, these lines often are still used. The same trajectory lines that were used in the run-up can be now used in the breakdown. And yeah, that's still what I think is very likely going to happen here going into the new year. I think it's going to drive a lot of the prices back down. There's a big small cap boom going on that I think is going to get a real big slap in the face early next year. Why, Booksy? Because not all small caps are equal. And it reminds me of what happened in 2021, because 2020 to 2021, the small cap did have a boom, and the market, if you look at the IWM chart, generally just kind of recovers from COVID. It looks like it just kind of recovers. There's this really long-term top on IWM, which is the Russell 2K. It took a really long time. And it finally, when it does capitulate, it goes down and it doesn't make a new all-time high until literally like a week or two ago. And it was 3 years that it didn't make an all-time high. I mean, that's crazy. It's a long time. That run up was just kind of like a flash in the pan if you look back on it. What's interesting about that, comparing it to the small caps individually, is that they're very diverse. And so there was a lot of early weakness in small caps. AMC is a really good example of that. It broke down kind of in tandem with everything else, but it shows a stronger, or it showed less resilience in some ways. Some of you guys are going to think it didn't. You're going to think, oh, it showed a lot of resilience. It held up at this level, and this level, and this level. But you look back at the distance traveled, and AMC outpaced the rest of the market in terms of distance traveled back down. It had to in order to get to where we are now. And some of that's because of APE, some of that's because of that reverse split kind of stuff. But I digress. The point is, I have a theory. It's not unbased. It's not based in nothing. But I have a theory that the big rally that we're seeing is positive. It's not a negative rally, but that it's going to go into another lull after the flash in the pan is done, which usually is what happens. It's like you get really excited. Rate cuts are coming in. Consistently, the economy seems to be somewhat recovering as long as jobs reports keep up on pace as they should. And if they don't, then yeah, maybe that's a catalyst. But you have the Trump victory, which did, regardless of your politics, boost the small cap outlook. A lot of those things are true, but it reminds me a lot of what happened in 2020. I know it's a different time. Don't get me wrong. And I know that small caps haven't really had their due, and I talked about that for a while, that they really took a long time to recover, and they're like finally trying to push up to all-time highs. And I've had on my chart 250s for a little while, but we did a big macro analysis, and what we found is that there's a likelihood that around May, by about May, this is not quite right the way this is drawn out. I just kind of doodled this. I don't remember when this happened. But it was somewhere around here. This would actually need to be on a downward cycle. Now that doesn't mean, because it's like a 4-year cycle and it's pretty consistent. That doesn't mean it goes down really low. It just means that by around this point in time, there's potentially like a final push up around June, and then there's like a downward cycle. And it doesn't mean that, and I wish I had that chart pulled up right now, but maybe I could find it. Maybe I saved it. Nah, of course I didn't. Why would I do that? That would have been smart. Why would I do that? Why would I not save it? I don't know. But this upward cycle would start turning back down around summer. So you'd have like a downward motion and then potentially come back up again. But I think what we're going to see is that this rally does go pretty far. It may even go to like 300s or something, you know. But by around the end, I think you're going to have, in my opinion, you're going to have another topping motion with some pullback. So whether this flash in the pan starts earlier in the year or like mid-year, I think that we're kind of beyond that point right now. Like, I don't see a lot of continuation way past 250 unless it has like a big pop, kind of like we did back here in COVID. The problem with that is that you get what you ask for, right? When this pop happened, it's like, woo, we're going to all-time highs, and then you spent 3 years coming back down. Because small caps, while they can present really good profit opportunities, they're not as resilient as the rest of the market. Like, they just aren't. So the ETF is a safer trade, but individually, like these small caps, some of them took like a beating during this time. AMC is one of them, and just really got demolished. So I don't see any problem with this chart. That's not what I'm saying. I just, in my brain, in the back of my head, I'm thinking like there's decent probabilities in place in my mind that I think it was the cycle was around here, that this is like already in like a topping motion. We could make all-time highs continuing into like June or July, but then at some point you're going to have like a downward cycle. Some of those downward cycles, were not like extreme. So we had some that were like just depressive cycles where you're kind of still making highs, but it would just be like a low, like a trough or something, things like that. Doesn't have to be like some massive pullback. But I suspect that kind of like what we saw in COVID, and I believe 2016 was pretty strong. Yeah, it went just kind of constantly up. You're going to have periods of like sort of sideways, basically. We're at this point right now where we're sitting on the middle of a massive uptrend. So this is kind of where I expect it to happen, I guess what I was trying to say, like right here. Anyways. We've been pretty good with IWM this year. Just if you're wondering, if you're new to the channel and you're like, well, how do we know? I don't know. You don't know, but our track record with IWM's been pretty darn good. Like the 252 target was a pretty early target. Like called that out way back here somewhere. You know, like we've been talking about it all year, and it's just there. I mean, timing was off. You can see like it's obviously not hit the right time, but the targets have been really good. I don't know what to say about that, except it just didn't go there at that time. I don't know. I didn't change my chart to like make it look like I was right. But this was the main trajectory. And we originally were thinking maybe by October, and it's more like December, but it's there. So Mr. Books, ignore my drawing, but check thus chart. AMC with 0 price adjustment. Very interesting. I don't see a link or anything. You worked with Spike? That's pretty cool, man. Yeah, he's in New York. He loves the Knicks or whatever, right? He's always at their games. I'm a fan of most of his films. I don't really think like badly of most directors. I think most directors are pretty decent. There's only a couple that I'm like, meh. I'd rather not watch their movie because I know what it's going to look like and it annoys me. I like when you get to a point in life, if you really like movies and you get to that point where you can start telling who's directing it without knowing who's directing it. There was we were watching something recently and I didn't know what it was. And I walked in on it. My wife was watching it and I said, this looks like a Guy Ritchie film. And she's like, I don't know who directed it. And we looked it up and it was Guy Ritchie. I was like, heck yeah. I was like, yeah. Because he has those frenetic, it's not steady cam, it's the pacing of his cuts. And he tends to pace things very fast, snappy. And then the way he frames things, he does it pretty much the same every time. And I find that to be really cool. Like, if you can come into something and be like, yeah, I think I know who directed this. There's plenty of unknown directors out there who you probably couldn't do it with, or lesser known directors. But, you know, like you always know it's an Aronofsky film based on the way it looks. You know it's a, you know, I say Guy Ritchie, but his is more because of the frenetic pacing. He almost uses like a higher frame rate sometimes too. He likes that kind of look. What's his name? David Yates, the guy that did the last two. He's obviously a fan of Guy Ritchie. He did the same thing in the last 2 Harry Potter movies. I think it's David Yates. I forget his name. Anyways. Terrence Malick, he's easy. He loves to point the camera at the sun. He's also really ethereal, kind of like Aronofsky. So, yeah. I like Spike Lee, the way he uses color. Wes Anderson, obviously, you can always tell because of the pastels. And then Wes Anderson uses symmetry in his films, like religiously. He loves symmetrical shots, straight on, flat, like you're looking at a storybook. That's like his thing. Like it's a rip from a page of like an illustrated book or something. So he loves to just have like the still, straight on shots. Yeah. What? Yeah, I guess Spike Lee stands out to me a lot because of the color and there's like a warm kind of a feel. I don't know. I'm trying to think of other directors that I know. Martin Scorsese is a big one. His are harder to tell sometimes, but what was it? Ford. Ford is like he's an older director, but he was really famous for using really low horizons or really high horizons. Like he liked the yeah, anyways. And so, and cinematographers are the same way. Like, I've been able to identify Roger Deakins. He's really famous cinematographer. He uses a lot of natural lighting, which it usually looks really incredible. He's just a genius with it. Um, he's so good, and he's one that you can almost always pick up on. Anyways, sometimes director and cinematographer get mixed up a bit. People think that the cinematographer and the director are the same because they're working together, and the cinematographer obviously is in charge of like the lighting and the camera. The DP, as they call him, director of photography. But like, you get a little confused because you see those behind the scene things, and you're like, well, what is the director doing if he's not behind the camera? Well, he is behind the camera. He's looking at the shots, but he's not usually the one controlling the camera or the lighting, setting up the camera. He's directing, so he's telling everybody what the shot's going to do, the pacing, the actors' pacing, and stuff like that. People get confused though, because they're like, "Oh, that director has really pretty cinematography." And I'm like, it's not so much his cinematography as much as like the pacing of it and like what he wants to be in the shots. Like he is in a large part in charge of that. But like sometimes it's actually people are talking about the cinematographer when they're talking about like visual aspects. Anyways, I digress. I get on about movies sometimes. I like movies. I actually really don't. I don't know if that's a common thing with AMC people anymore, but a lot of people are just in this play because they're stuck in it or like they think it's going to be a squeeze play. But I ultimately, reason I invested in AMC back in COVID era was because I was like, movie theaters are probably going to recover. I like film, so after COVID, I thought they would recover, and they did. But then of course it crashed. You know, so you have what you have. But I think that I think movies are great, man. I wouldn't be invested in a movie company if I didn't like movies. So I could sit here and talk about it all day. And my degree, whether you believe it or not, is actually in animation. And I have a concentration in 2D animation with a minor in drawing. A minor in drawing just means that I spent, I don't know, extra 60 hours or something in drawing classes. 2D animation's mostly dead. You guys are like, no, it's not. It kind of is. It's not what it used to be. I'll just say that. Like traditional 2D animation doesn't really exist in many places anymore. The Japanese still do a lot of it, but and some like early or some like kind of niche film companies still do it. Thankfully, stop motion didn't go away. There's still a lot of places that do that because it has its own look. It's hard to reproduce it. Aardman Entertainment tried to do that, but it didn't look very good. That Flushed Away movie, I remember, and then that pirate one, I think, were both done with CG. And then they went back to just doing it like the classic way. They did the second Chicken Run movie. It's on Netflix, I think. And that one's pretty good. It looks really cool. The behind the scenes for it is really neat too. They talk about the that staircase shot that they did in that movie and how complex it was because of the lighting, because they wanted it to be like lit underneath. It's a really interesting watch for behind the scenes stuff. I'm a big practical effects kind of person. I like that kind of real feel to things. I don't care if it looks in reality, like I watch like Lord of the Rings and stuff, and I know there's like so many miniatures, and some people would say like miniatures are great until you can tell they're miniatures, and then it looks really stupid, right? Because you're like, oh, it looks like a miniature. But I almost rather have that than just being like, oh, it looks like CG, right? Because that to me really takes me out of it. Because when I think something looks like a miniature, it's still real. It's still like a real object. There's still something really being filmed. But when it's like CG, I'm like, it's all computerized looking. It just feels like that uncanny kind of stuff. So it's like, it doesn't matter. Because like people will be like, oh, it looks crappy because it looks like a miniature. And I'm like, well, I mean, that's old school, right? But you could say the same thing about CG when it looks crappy. You could be like, oh, that looks crappy. It looks like CG. I'd rather be on the other end saying, oh, it looks crappy. It looks like a puppet, or it looks like a, that to me is, I'm like, I'd rather it be that kind of quote unquote bad, if you want to say it's bad, than CG bad. Anyways, so I've always been really a big fan of that like visceral, like physical look to things. And it's funny because when I was growing up, I didn't realize that Disney was doing stuff to save money. But if you go back and you watch some of their films from like the 70s through the almost up to the 90s, they have, after it wasn't Snow White, it was, what was it? The one with the dragon. Maybe that was it wasn't Snow White. Snow White was like the first one. Swan? It wasn't Swan. What was that stupid movie? Now I can't remember. You guys are like, I thought you were an expert at this. I am, but sometimes I forget things. So it's had a lot of spin-offs. It was Sleeping Beauty. Yeah, it was Sleeping Beauty, which was in 1959. So Sleeping Beauty, you guys are like, so you forgot Sleeping Beauty, Booksy? Really? You're into animation? Yeah, I even had to study animation history. Sleeping Beauty was one of their most, it's a weird film because people think it's like some kind of Disney classic, but it actually came right before the big crash in the 60s in Hollywood, and like hundreds of studios shut down in the 60s, and it's considered like the dark age of cinema because it has historically like the least amount of produced movies. There's like 1 year where only 100 movies are made. You guys are like, well, 100's a lot. No, like historically it's the bottom of the barrel. And it's a really, I think it was like 1963 or something, it was either 1963 or 1969 or something like that. There's like the fewest movies ever made. And there's dozens and dozens and dozens of studios that shut down. And animation went into like this big slump as well. And Sleeping Beauty was right before that, and it's often thought as like this classic, but it bombed at the box office. It did really badly. And what's interesting about it is it's one of the most, because there were competitors at the time who were doing really interesting things with their artwork, it's actually one of the most different looking films. If you go back and you watch it, it still has like the classic Disney movement feel, but like visually, it looks really different. It has a really interesting style to it. And it was it was an attempt to try to not reinvent the brand, but to do something unique and kind of get away from their first look. It was in response to other projects that other studios were doing and to try to bring people back to the cinema. Well, they didn't blame the style, they blamed the fantasy. And so they decided that if you didn't know this is the whole reason why you didn't get fantasy movies anymore. They thought that people were burned out on them because they were just doing like storybook fantasies. They didn't do well. So then you start moving to like stuff like 101 Dalmatians and, even like Robin Hood and Jungle Book. But they're not like these kind of high fantasy anymore. They're more grounded in like folk stories and stuff like that, or even modern era kind of stuff. They didn't do it. They got rid of Mickey Mouse. They kind of retired Mickey Mouse for a while. Like Fantasia didn't do well. They retired. It did okay, rather, but it wasn't like the best. And then that was also experimental. And then so was Sleeping Beauty. Anyways, point being, they moved to this other style of animation. And when I was growing up, I thought when I was a kid, I would watch these movies and I thought it just looked really cool because you could see like the line work. And looking back on it, I now know that that was actually because they used dry copying, which is like they basically photocopied their line work and just bolded it. So they didn't have to pay any inkers to come ink the film. So they essentially used photocopies to cut the budget. They didn't use professionals to come in and do the line work and clean it up as much. And so you see they've done a lot of re-releases where they've like cleaned it up. But if you watch the original like 101 Dalmatians or whatever, you'll see all these line work pop up every now and then because the artist was too bold and it got photocopied in. I thought it was intentional. It had a really specific look to it, but it looks real. It looks like drawn, because you can see the drawing. Funny enough, find out later as an adult that that's really because they were losing money and they wanted to make cheaper movies. So they didn't have to hire like whole departments. It's also the reason why we have Disneyland and Disney World and Universal Studios, because they were running out of money, so they decided to diversify and have theme parks because they needed another way to make money to stay afloat. Why would that happen, Booksy? I've talked about this before because of the TV. Television? An in-home media service making a dent in the movie industry? So the movie industry has to evolve and reinvent itself and have a renaissance? Can't believe that happened. It's almost like what's happening right now. It's a little different, but mainly because the quality of TV was undeniably worse than the quality of cinema at that time. But yeah, the in-home television made a lot of people not want to go to the movies. That was in the 1950s, and then going into the 60s, color TV became more popular, things like that. A lot of people didn't have color TV for a long time. So there was still a lot of reason that you would go to the cinema, but ultimately it's a big contributing factor. It's not the only thing, but it's a big contributing factor. There's obviously economic things, but it just reminds me, every time we go through this, I'm like, yeah, this has happened before. History rhymes. It often repeats itself. And what's crazy is if you had invested in Disney in like the 60s when it was like slumping really bad, you'd be like ridiculously wealthy right now. I don't think you could argue that it's exactly the same now, because obviously they're now in the streaming business. They've already been in the television business for a while. Like the Disney Channel obviously was another response to television. But I find it to be really fascinating, that the ideas of cinema have been challenged before and gone through major slumps. And that's my history lesson for the day. So there you go. I don't even remember why that started. Just started talking about directors and stuff. But movies are something that I do care about, and I think that cinema in and of itself will probably benefit in the long run from what's going on. And I've talked about it before. I don't know why people have to see it as like a win-lose kind of thing. I genuinely think it could be win-win. I think there's a big enough, like it's one of the biggest industries in the world for the last several decades. I mean, it's always been big since the 20s basically, but I think that the 1920s, now we're in the 2020s, 100 years. But like I don't see it going away. And I know there's people that have said that they don't think it's going to survive, and I get it. With cost of home media being cheaper, and with the ability to get yourself a huge TV and all that stuff, I understand that, but I don't think it's always win-lose. I think that's a bit silly. So I think there's definitely a path forward for win-win, and there's a big enough market for it. I said I was going to address this earlier, and I kind of didn't get at it. Mara, there was a person in our Discord who was asking about this and asking about whether I thought it was on the break, on the cusp of a breakout. So I'm gonna start by just playing a little bit of devil's advocate. I don't know Mara as a company. I don't know exactly what it is, his holdings, so I'm not sure. But I'd have to look into it. But I think that on the whole, if I were just looking at this chart, I would say it's struggling right now to keep above $20. You can see like the push-ups. There's 4, 1, 2, 3, and then 4. So there's 4 push-ups right now that are trying to advance. This is pretty typical when we see distributive action. And ultimately what it comes down to is whether or not it holds this last break and or pushes resistance. I'm not seeing any real push of, so I'm on the weekly right now. You can see on the weekly this is closed above this line plenty of times. It's not exactly holding to any kind of particular rule. It's a long-term stock, right? In terms of this top began in December 2023, so it's been a year. And I'm calling it a top right now because until this pushes resistance, there's no SOS to speak of. You could have a sign of strength if it pushed above and it held, but it would be like you can only count it as what you can count it for. So you couldn't count it as like a sign of strength on a range here. What I'm seeing is there's a consistent push. So this push to the upside, then immediately comes back and makes a new low. And that to me would indicate that there was weakness, which then played out as the stock moved along. So this bottom right here did indicate that there was a weakness, and then you can see that it didn't hold. So there's a lot of weakness in this setup right now. Whether or not we think later it's going to be a trap or not, I don't know. This is a test of that move. I think that again, probably the best thing to do, and what I'm going to do is just take away that and look here, is look at this last breakdown and see what's going on. And you can see it's a wave back up. Yeah, so it has a weakness here. It pushed below that that trend, and then it also pushed below the bottom. It goes up and distributes again at 27. It comes back down, bounces at first on that line like it's going to hold it, but then it goes and tests it, and it actually pushes through. It seems like this probably came in response to this really significant, I mean, it's negative, or that's a 467% miss. This is a lot more like mild, but yeah, I think it's a debatable one because it looks like it could be breaking out, but I'm not so sure. Like, this is a really high volume top. If it's going up here, there's a lot of volume here in these peaks, especially this one, and then going to the second one. To me, it looks like a distribution right now. I don't think it looks very good. So the reasons are kind of obvious, but I don't want to sit on this too long. So yeah, I would argue that it looks kind of like a cat ear top right now. Like, it's trying to advance and it doesn't necessarily have the wherewithal to do it. So locally, you could watch it and see if it holds above, as it hasn't even pushed the top yet. All it's done is pushed over this, which again, that to me signals potential distribution in this case because of that high volume on that push up, and the fact that it just came up and hooked on that level and didn't advance over the top. So, and in my opinion, unless it advanced over like 34 and then held that SOS, I don't think it's a good trade to the upside. It could happen overnight, but it's not there yet. Right now, it reminds me a lot of those 4 tops where the 4th top is a hook that comes slightly above the previous, and then it starts sliding back down. If there's a sell-off, it's going to break down and come down pretty hard. So it looks like there's another established trend here. It's probably like a fib fan type deal. Yeah. Let me reverse that. So coming from this bottom, right there, fib fan, I'm just saying, whenever you have a trajectory coming off a bottom, you could use a fib fan on it. So I would say I would be pretty short and or bearish on this if it dropped back below this intersection at 20 or 1950. And then I would probably not be bullish unless it SOSs up here at 34 and continues. Because right now it just looks like another upthrust. High volume top, high volume top, high volume top. A lot of low here in this trough, and then it didn't come up high enough. So bull path is it holds here. It doesn't go below 21. It would have to advance again and then break out here. And then frankly, again, bear path is sort of, in my opinion, it's more likely at this point. Yeah, that this is going to sell down and probably go pretty low. You never really know. Sometimes this kind of stuff ends up becoming like a bull flag. But again, I think that's kind of implied in this, the way I drew this bull breakout. Is like that would be a flag, because if you look at this as a flag, you would be looking at this like this, and then you would see it break above and then go. It's the same idea. But if it's not a flag, and I think it probably isn't, that's just my bent right now. I think it breaks down and it starts driving low, and you're probably going to come all the way back to the last known big creek. So probably this one. See how it left? We talked about this on AMC. You see how it left here? It made the advancement. We were talking about this earlier on AMC. You see how it left? I'm not biased when I say these kinds of things. I hope you guys know that. I genuinely think about this on every single chart that we look at. You see how it jumped here? There is another resistance. I mean, you could use that other one. And I think that's what they did right here. So they jumped over and they used that as like an anchor to help propel the stock forward. So there wasn't like, it's not if then, or it's not either or rather. They're not mutually exclusive. Both of them were in play here. So this resistance was pushed up and then was used as the takeoff point here. But if you look at the actual main resistance, which frankly, excluding this distributive top, which is clearly what it is, you can see it in the RSI, you can see it as a extension above the top. Everything else here indicates that this was actually the resistance and that this was just like a fake out, you know. And so looking at that, it's kind of hard to ignore the fact that that was also right here. There's a top right there that was a hook. You can see it right there. And then when it broke out, it never checks it. So again, it's like, yes, there was a resistance that was pushed up. This might be employed later because it was clearly used. But there's two pretty strong checks that really haven't been checked. And they're both significantly low. Another thing that I would look at is this guy. So way back here when this wave was coming down, the reason I did this was because there's I don't think this is always the case, but there's usually like a channel bound wave, if you will. That usually makes sense because if you think about waveforms, they're always going in some kind of a channel. So every now and then, if I see a channel line, I'll think about it and I'll just drop like a curve to see what works. And this to me worked pretty well almost immediately. So it's also supply demand. So like you can see here, there was a lot of supply here up until this point, and then it tries to act as demand. But notice that when it comes down, it comes lower. And so it made like a double bottom off of, or like a reversal, almost an Eve Atom type bottom, like a V-shaped bottom off of 521, which was the previous top here. So it did come back to check that, but then it dived beneath it as if they were going down to fill that gap, but also to check liquidity, which sort of looks like a spring. But then you see this high volume as if really it's just going back up to redistribute back along 22, which is what I marked off here. Like someone wanted to take it back up to sell down again. So I have a decent enough inclination at this point to suggest that I don't necessarily think this is good. And frankly, it's ugly, but this could be going down to like $1.60s. I don't think that's a very fun thing to say when the stock is currently at $24. It seems unreasonable, but there might be a reason that they're doing that. Like they left something behind back here. You can see there's a gap there, potentially. And I don't necessarily mean a gap like an actual gap on the chart, though there is a little gap there. I mean like there's a liquidity shelf here that doesn't really look like it was very traded. That could be what they're going for. And on the big picture, again, you might look at this and say, there's no way. It's never going to come back down that low again. There must be a reason. It was bought up here. I'm not saying it's going to come all the way back to the bottom. I'm saying that if you look at where that buy zone is right here, this is where they found a lot of buyers right there. Huge amount of buyers right here off that bottom. And so I don't think it's a coincidence that they're looking for potentially like a similar move here. Potentially, right? We don't know that that's exactly what's going to happen, but I would suggest that that's pretty likely. And then, yeah, and then this is kind of like the middle of that range. So maybe we can make this red so we can see it a little easier. It makes sense. This would be where that demand would be. Like off of this area right here. So they were able to get some more buyers there as well when they dipped below 5. So if this ended up going down, I'd be watching really carefully the area from 5 to 7 for a possible rebound there. Maybe that it doesn't ever go like low again. And then if it doesn't hold there, I think it's going to go back to like $1.60 or something. I think it's going to go really low. Yeah, I feel like that's very likely. Yeah, this to me is just there's so much weakness that happened right here in this push down at 3s. Unless it's a spring, and in which case this would continue, but it doesn't look like it. It looks like the M cross went up enough to jump the first creek, but then it didn't check it, and now it looks like it's kind of having difficulty against that wall. If it breaks to the upside, it would have to hold here, and the target doesn't look particularly high. It looks like 61, maybe this level. There. I'm looking as if this is like an estimation of like a 50-50. Where is the actual resistance? It's up there around like 60. So that makes sense. If you were going to advance here, you might be able to get that push up. You'd probably try to get back up to 60s to sell. But I don't really like this as I don't think this is a great trade. I'm just going to be honest. I think it looks very bearish to me, in my opinion. I don't know, man. I didn't get any links, so it's not working. Yeah, it may be marked as spam, but I don't know why. It just is. So anyways, that is a possibility kind of thing, and I think that this looks like a June. I know it's weird. It kind of looks like what's happening on AMC, which I don't like putting a whole lot of emphasis on stuff like that. But there does seem to be like a lot of charts that are suggesting that move down into May, June. I mean, this is like the 5th or 6th chart we found that seems to suggest that May, June would be a low period. We could be wrong about all of them, but if all of them are saying very similar things, like without drawing that conclusion ahead of time, like it's just very odd to me. I feel like the market's being a bit messy. If you're bearish on Mara, you got to be bearish on crypto. Mara is Africa's digital holdings. Mara operates as a digital asset technology company that mines digital assets with a focus on Bitcoin ecosystems in the U.S. It was previously known as Marathon Digital. It was Bitcoin mining, so it's a crypto miner. Well, maybe. Like I said, this isn't really like set in stone yet. It's at the point where it's looking bearish because of the way this moved right here. The volume in here clearly indicates there's a lot of sellers. You say whatever you want to say, but if this was all buying, then you would have pushed up. There's a huge amount of volume right here. So clearly there's a gigantic amount of sellers. I don't think that Mara necessarily by itself means, if it's bearish, that it means that you think that crypto is bearish. It could just be that this company isn't as valuable as some other minor companies. Like, I don't know the business as well as other people do with cryptocurrency. So I'm not going to sit here and pretend I'm an expert on cryptocurrency. I'm not. It could be that this is made to look bearish and that it has these targets going forward, but it's going to do the breakout. But I don't think you can look at this honestly and say that there's not a lot of selling going on. That would be really silly. The fact is that somebody out there, quite a large number of people out there, are getting out of this run-up. If it's a flag, it breaks above 34 and goes. I mean, we've already said that as much. So I don't think there's much of a debate here in my mind about that. Like, it's pretty straightforward. Like, it goes to an SOS and then it breaks out. And that, in that case, you know, this could be an early SOS here, which I don't see it as that, but it could be an early SOS with a backup in a reaccumulation schematic that has a spring. But it kept making lower lows, which bugs me. And it didn't even hold like the trend that it was trying to hold. This could be seen as like a liquidity test down, and maybe that low volume was a weakness on the part of sellers. Then it got bought back up, but it immediately goes into like a spike on the highs. And again, it just pushed above this previous top, but it didn't go above the top resistance. It looks a lot more like those cat ears that we draw out. And they usually look like that, which is they have like a breakdown of the trend, which this trend is broken. Like, make no mistake about it. This is a broken trend. So I don't know. Maybe I'm wrong about the setup, or maybe it's just a bear trap, but it is what it is. I don't know. I didn't know what this chart was, so adding that piece of information doesn't necessarily change anything. If I think the chart looks bearish, the chart looks bearish to me. It could just be, again, this idea that it's overvalued at this price. It may not have a direct representation of like what happens all across the board in crypto. Does every crypto miner always boost whenever crypto runs? I don't know. That's not my area of expertise. If it does, then okay. But maybe this doesn't really stand in contrast to anything, because, you know, you guys might say like, all right, if you're bearish on Mara, you're bearish on crypto. That's not necessarily true. Doge, we've talked about previously, like Doge has a chance here of running up higher like right now. But if you look at the overall picture on Doge, I'm not seeing any inconsistency here at all. Like, if I think that Doge bottoms here, and this is a preliminary support or preliminary supply, and then it drives the price up to $1 to $1.30, that area, that red zone up here is where I think it probably goes. I don't think that that's inconsistent at all with what we're talking about on Mara. It doesn't look wrong to me. If Mara makes the last little jump there and goes up to 60 or something, so be it. That doesn't mean it's necessarily bullish. It's a short-term bullish move, but it's done this before, you know. Long-term, look at then what happens here in terms of like what I've personally, this is just my personal TA. I've personally thought for a while that this is the most likely course of action for something like Doge, which would indicate that in general, this is probably what I think about all crypto, is that you're going to get a winter boost here. This only goes up till January, and then it's going to sell off for the next quarter going down into May. I don't think about this very controversially at all. So this sell off from January through May, I've got that on my Doge chart. Does that somehow stand in direct contrast to this idea that this could then sell off from January, you know, which is right here? This could somehow sell off from January through May, does not at all stand in contrast to what we've been talking about. So I'm not with you on that. I think that the idea here that maybe you get a December burst, I mean, it doesn't have to look like anything, guys. It could be very simply like, oh, this bursts up into December 30th and then tanks, you know, or tries again. We have no idea how much or how little this might participate, but I'll tell you right now, like looking at it, this has gone on since December of 2023. This isn't broken out like Doge or Bitcoin or whatever. It's just sitting here on a top. Sometimes these stocks, they participate more in one side than the other. And I would argue right here, this is not participating very well by comparison. If you look at December, let's see, this goes from December 2022 to December 2023. That's the run up. And then now we're in December 2024. It's just been going sideways. Let's go back and look at this. December 2023 is back here. Right there. It's a little late to the party, but it's close. But this is December 2023 right here. Through December 2024. I mean, it's just sitting there. This doesn't look the same at all to me. Like, I'm gonna have to go back and like look at it again. I keep flipping back and forth. I should have just pulled up like a side by side, but I lost track of where I was. So this is the bottom. The weakness was here in January. Actually, this is like January. I don't know why I said December. That's why I got it wrong, because I said December 2023, but it was December 2022 through 2023. That's why I got it backwards. December of 2022 is way over here through December of 2023. So Mara had a run up during this time period as if it kind of hit the same bottom and ran up, and then it went sideways, and it's still going sideways. So Mara's chart would be like more like this, I guess, like it ran up from a bottom to the creek, because it hasn't jumped the creek, and then it's just sitting there for like a year still. So I'm curious as to why we would think that Mara would somehow be one-to-one with, just in general. Like, I don't know why you would think that. If it, during this time period, while Mara's been not breaking its creek and just kind of chopping for a year with really heavy volume, why do we think that it's going to run now just because maybe this has another leg up? It's already moved like halfway, and Mara didn't budge an inch, really. Not much. I mean, it moved a bit because it's obviously come back up, but why would this cause Mara to break out, I guess? This next little leg right here. I'm not seeing a direct correlation to why that would be a bigger move suddenly. Like, it would be reasonable to expect that, I guess, if this is a move from just this year, that maybe this is like a 50-50 kind of move, just like the other, and it comes up to, again, like near this other level, which is kind of what we were thinking anyways. This is what I drew out earlier. It could come up to $50 and then sell off. You know what I mean? Like, I just don't get the... You guys invest in whatever you want to invest in, but I'm not seeing that as a disconnect at all. This is a big flub, you know, when you look at what happened during this time period on something like Doge or Bitcoin, this just looks like it's just sort of sitting there. It's not moved for a year, and it's just kind of heavy volume right on this creek. So yeah, I don't have any doubt like it could hold here and then just break out and go, but it's a big what if. And frankly, like on the big picture, if you're looking at then what happens going into 2000 and mid 2025, this falls in line quite well with what we see on Doge, that it could have like clearly have like a holds the second amount of Bitcoin, second largest amount of Bitcoin. Yeah, but I guess what I'm saying is like maybe there's a reason that the chart itself, I don't know. I'm going to stop there. I got to be careful. I do not fully understand, and I don't want to pretend like I do. I do not fully understand Bitcoin mining. And so for me to like sit here and say like this is the correlation between the two, I'm not sure. From my understanding, Bitcoin is like, the way you would think about Bitcoin is like a currency. That's the way I would think about it. I would think about a currency as like, in this case it's fiat. We're giving it value based on what we think it's worth, whether it's going to be useful or not in the future. So it's got future value or whatever priced in. The currency itself isn't necessarily not used. It's used. It's just not yet become like the most standard thing. If you go to the grocery store, most people aren't paying in Bitcoin. They're paying in US dollars, right? But investing in currency and investing in crypto are not exactly one-to-one either. Like a lot of that crypto stuff is not even a currency. It's like blockchain stuff. And like there's all kinds of weird cryptos out there. I mean, you can go read about them and they're not all the same. They're not all proposing to be like the next currency. You know, I find it to be very strange, okay? And I'm still learning a lot. But for me to sit here and say I understand how a Bitcoin miner or like a holder how would that relate to, I don't know. Is it like a bank? Is it like a gold mine? Like there's all kinds of weird things you'd have to understand. And it reminds me of when I was investing originally. I invested a lot in oil, and excuse me. What I found is that there were oil companies that they were not selling oil. Well, they were buying and selling oil, but they weren't like oil itself. Like you weren't investing in the commodity, you were investing in like the mining of those companies. So like there was one, I think it was Fang, F-A-N-G, maybe that was the name of it. And it's like they do like offshore mining and different stuff for oil. And they never had as big of swings. Like their swings were much more mild and much more like toned down. And it almost was like it didn't seem to matter that much sometimes if oil was like dropping or rising in value. The mining company itself, which is the one that's kind of generating that oil or whatever, stood on its own 2 feet in that regard. It would be affected by the price of oil, but it wasn't like the price of oil was always directly impacting it. Okay, that's all I have to go off of when I think about stuff like crypto and crypto mining and crypto banks and stuff like that. Is it financial? Is it more of like a commodity trading? I'm not really sure. I do not want to sit here and say I'm an expert because I'm not. And that would be really silly and ridiculous for me to say that. So I do not fully understand how this might interact with it. But I can tell you from at least my own trading experience, sometimes the holdings or the bank or the mining, the kind of the people behind the wall are not impacted in the same way that you would maybe expect them to be at every given point. Just because the value of something goes up or down doesn't necessarily mean that the person holding those things is always, at least on the chart, is always impacted the same way. So as a company, there might be a good reason why this comes back. I don't particularly see this as necessarily like the end all be all sign of weakness or something. It's more just like looking back at this, there was a huge amount of demand from, it seems like when this took off, from like the 4s to 5s. Now, part of me wonders if that's a breakaway, in which case this could very well just be a V bottom, and it may have a backup, but it may not go that far. That's why I said you could watch, because maybe this backup doesn't actually go that far down. It ends up just going to like 7s or something. And then it does finally have like a move out, I don't know. But right now, all you can do, in my opinion, all I can do is just kind of look at the chart, because I don't have the expertise behind it, behind that particular brand of ticker. If I did, I would probably speak with more authority on it, but I don't. If it's something you guys are interested in, and I'm more and more interested in crypto trading, but I've already kind of told you guys I'm not a huge crypto trader. Doge is probably like the biggest crypto investment I've had lately in the last couple of years. It's not that big. It's a pretty small investment, but I just like the chart. So, but you really shouldn't invest in things you don't fully understand. So I feel like it's a difficult one for me. So yeah, all I'm saying is that right here, this chart definitely looks like there's a gravity trying to get back to maybe this as demand or this as demand lower. And if it can manage to come back to either these spots because of a sell-off maybe, or whatever news needs to justify it, it could be set up to do that. So is it breaking out? I just can't tell you. It doesn't look like it is to me. But, ultimately, like looking back, this is a possible support zone. When it did find support here back in 2021, this would have been like the June run-up, May, June. I mean, it took a lot longer than that, but it ultimately goes up till the breakdown, which is interesting because that's where the markets broke down in November. It does move up pretty far if it finds support here. So it did it twice. It moved between these two bars. So I think it's reasonable and simple enough to say, hey, if it finds support here, it should move up to maybe around 50. But I don't see how that somehow means that it's going to be bullish forever. And based on what we've seen in the past, it's extended pretty far beyond here in the past and still come back down. So, that to me is like a there you go kind of thing. Yeah, so perhaps like maybe this pushes up to, we were looking at that 50-50 around 45 or something. I mean, it could be that's the run that happens right now in December, and then it still could come back down. We don't know if that prop is going to last. I could see that being very similar to what happened back here, like kind of a last ditch effort to try to push it, and then it slides back through this creek and just starts walking down. So for me, it's like, if I think it's gonna maybe pop, but it looks overall kind of bad, is it worth it for me to catch that move or not? That's the question you'd answer for yourself. If you think there's a potential that it goes up here and continues, maybe it's worth it. If you think you don't really care, but you're pretty confident it's going to explode into the end of the year, maybe you don't care that much, you know? I personally don't like this kind of investment because I feel like I'm trying to catch wind, you know, my sail for just an instant. And that's kind of been that's honestly how I've been feeling about AMC too lately. It's like, it feels like I'm just trying to catch that breeze for that one big move and then I'm done with for now. And I don't like that. I'd rather be in a trade that feels steadier. Like if it's going to go, it's probably going to go more consistently over time. Instead of trying to catch like just one swing and then have to get out really fast. I don't like that kind of stuff. I've talked about GME already. I don't feel that GME is weak right here. I know it broke below this trend, so there's definitely a need to push back up above it. I see it as a little bit like a head and shoulder. You know, it's trying to, and my chart's a little bit too like neon tacky here, but it really feels to me like that classic, like, oh, it's made a top and it's going to come back down and it might shoulder. The fact that it came lower than the bottoms previously aren't great. We talk about this idea of sign of weakness. It sort of boils down to just basic fundamental truths about the market and supply and demand. If your demand is there to have stopping power, and we recently just bought off of 2751, then you might expect 2751 to act as a support. And it did. It tried to, but it broke right here, right? So like, clearly sellers were outweighing buyers on this drive back down because it broke. But then you get a return, kind of a return energy on that swing, and you end up coming back up to retest this trend that was lost, which is reasonable. This is like a 50-50 swing down. You might come back, retrace about 50%, and test that. That creates a head and shoulder type motion. This is very typical in the market. I've seen it a lot on AMC. You see it a lot on trend breakdowns. So in order for this to continue, what has to happen is that you do not want this, in my opinion, you don't want this to form like a head and shoulder. Let's see if I can just do, you don't want this to form like a head and shoulder out of this. It doesn't have to, but you don't want to form a head and shoulder out of this breakdown here. So if I were looking at this realistically, do I think there's a decent chance this pops back up to 30? Yeah. And I don't think that's a very hard to see motion at all. Like if it builds momentum and it can break this little creek coming down, it'll probably go back to 30, no problem. My concern is that timing wise, I don't really want it to do that going into earnings necessarily, but it looks like it's about to just explode. Honestly, it looks like today. It might pop today, this afternoon, and go from like 27 up to 30. We might get a little bit of a big move. Does the timing work out pretty well? Probably. Yeah. It's pretty tight. So we may not reach that point, but we're going to get close, in my opinion. So I think GME might pop this afternoon. But again, it's like, how do you kind of qualify that in the big picture? Well, at that point, what we're looking at is we're looking at this particular setup here. This guy as a potential neckline. And it may not be that precise, but I'd say that's pretty close, because you can see that's where the breakout happened here. The resistance is slightly above that, but then this is where it comes back to. So I think this first top, that's where the RSI peaked, and then it started dropping. So all this rest of this is like weakness. All this junk is just like a reactive move, and it's clearly like weakened, but then it comes back down finally. That kills a lot of that divergence right there, and then it pushes up again. There's still divergence, and so this happened like multiple times on the way up. This to me is probably the M structure, like 1, 2, and then 1, 2. So I think of this as like the middle of that yeah, like basically like the middle of that move. And then the rest of this, so that's your M structure. So then the rest of this would be like what happens now, right after the M structure is done. This to me looks like a potential head and shoulder. It looks like we might get a big pop either today or right into tomorrow. It's hard to say, but it looks like today to me. I think that triangulates pretty cleanly, and it does seem like it's already kind of timed out, right? So what you don't want is you don't want this to hit here and then come down and potentially break down low. So what we would do is, as best as we can, we're going to use the trend here, and we're going to use what we think is the middle here. And based on the peaks, we're going to do our best to see if that lines up. It's pretty close. I was eyeballing it. So I'm using that center mark on the structure. So if this formed a head and shoulder, it's never, ever, ever required to be perfectly proportional, but typically their timing on the shoulders tends to be pretty close. So it's the best estimation you can make as a technical trader. You can't do any better than it, unfortunately. There's nothing you can do. It may be a little off. It may not be perfect. It doesn't really matter. This is very typical of what we see, though, on a breakdown after a uptrend. So if we get a head and shoulder off the top, you might see something like this. I think that on the whole, again, this is probably like the main downward trajectory right here. So if you're looking at that bear case, bear side, you'd be looking at this down. Like this is the goal to take you to this point. So the turn happens on the wave, as you can see on the top. It was already happening, by the way, for several days. This has been happening almost a month now, because really back in November, it had already peaked on a lot of time frames, and this was just kind of chopping down. We had talked about it maybe coming down, going sideways, and then breaking up again, but that didn't happen. It broke down. So it did come down, chop sideways, broke down. At this point, the RSI is pretty much reset, which is good. So if we're looking at something like the hourly, you might be a little discouraged in thinking, well, I don't really want it to go back down. But if you look carefully, it's not really the case. Like, look at where the breakout is here, right? And then look at where that creek is. And notice that the RSI was already like turning up. And this is really nice because in this case, bizarrely, this was already like super high back in May, but this created like a 1-2-3 top on the 1 hour, which is really nice. And then it ends up pointing right to where that breakout happens. It's pretty perfect actually, where it ultimately finds support on there and breaks out, is indeed in the right spot on the RSI. So RSI is a really helpful tool paired with the price action. By itself, you can't always see a lot. So when I see this, I'm like, okay, so basically what we've done is we've now retraced on the RSI. We did a head and shoulder here. Oddly, we did a head and shoulder here on the RSI, right? And come back down. And RSI is now back to reset. It's really low. It's back to where it was here in October 22nd, which is down here. So the fact that we are where we are and we're higher, I believe that's a possible hidden divergence, right? We're talking about a bottom. If the bottom, I don't want to say it's like hidden. I have to look at that chart. I always forget. I think that's a hidden divergence where like if the RSI resets lower and the price is higher and it's on a bottom, it's bullish because it's resetting at a higher price. That makes sense. So we're definitely in a spot right now where I could see it pretty clearly like popping to the upside. This to me also seems really important. So there's a trend going up through here. So just like the head and shoulder right there where we have that hook, I would see something similar like that on being somewhat necessary on RSI. And we could probably just assume that it's right there. This is actually a pretty straightforward chart. So my expectation might be that if this does go and go far, this could run up to the top, going into earnings, which is on the 10th. Right there. That this potentially could like pop pretty big. And honestly, I guess with this, it may already do that. It may go ahead and move up. If it does it today, who knows? That RSI could come all the way back up to the top. So what did I do with that chart? That's right. I just got rid of it for whatever reason. So let me do this. I'm going to use the orange on this one since that signifies where it might come down for a low. So if this held and it didn't go below the bottom here and then it breaks out again, you can see this as a wedge now, not a head and shoulder. So what I think might happen is that as this goes down, this generates a divergence. The price goes lower, but the RSI stays higher. You're doing a lot of wonky estimation stuff today. Well, this is a cat ear right here on the RSI. So it's a distributive action for the RSI itself. It's not affecting the price because the price is still going up. RSI is coming back down. It does affect it when you get to the top because this ultimately is a pretty massive divergence. Like this is going up in price, this is going down. But if the RSI resets and the volume drops on selling, it doesn't necessarily go through with it. So we've talked about that to the upside quite a bit because we've talked about how like you can reset a bearish divergence if the RSI comes down fast enough and the price doesn't move far, and that's what's happened. So there was a lot of selling, but then the price didn't really go that far. You see that? So that's not necessarily like a bad thing. And that to me typically happens in the middle of like an S-curve or something where like it needs to take a break. So on the hourly, this is pretty chill. I know it's not the highest time frame, but it looks good. So I'm guessing, but I think that the way this is set up, it could present itself as like a divergence here on the bottom where you get like a higher RSI. So there's a turn back up. We'll have to wait and see. I'm not positive it's going to happen. But if this pops and it goes to 30, it's going to present like a head and shoulder. You'd watch to see the neckline. The neckline is actually steep in this case. I think it's pretty low. I think it's down here. So it looks bearish because it goes lower. But in reality, it's going back and checking this line at 26. This area, well, it's like 25.90 to 26. Going back to check that region. That's pretty much what we thought. When we came up, I was surprised that it came back to 25 when it did. But that's the area that we were thinking it might catch. It was around 25. Remember, that big picture, I know I have a messy chart, but big picture, we had originally thought this would push up high first to maybe this area around 30 and then come back down to 25. We went higher than expected, but now we're kind of testing the same waters. And I actually had made a case that it could come all the way back to 23 at that time. I picked two levels. There's the blue and the orange. One was 25 and one was 23. So this isn't, again, brand new stuff. It's pretty straightforward in my opinion. There was two targets in mind when we started up here. One was a particular retracement, one was another retracement, but then both of them were decent probability targets for certain reasons. And so they're not out of the question. So certainly if you have a head and shoulder and it breaks down, you'd have to do the math for it. It's usually about a 50% of the head kind of move. It's like 51%. But if you want to just guess, you can kind of estimate like that's about 50%. And you would take that from the neckline and you drop it. And this would suggest that you could come back to this top at 24s. So it's a good target. Doesn't mean it's going to hit it. Just it's a good target. If it does drop, you're probably going to expect it to come to 24. Okay? That could happen going into earnings if this just bleeds out further. Another evidence of that might be where is that in relationship to the current bottom. If the current bottom's at 26.75 and we popped up to 29.85, that's about a 50-50 flush, so flush. And then big picture, it's also about a 50-50 flush on the big picture. So there's a lot of evidence that suggests that that might be a target that we're going to try to get to. That's like 3 or 4 different convergences of ideas. Big picture, does it necessarily make perfect sense? Nah, I mean, yes and no. Like, I guess back here it was used. It's not like I wouldn't have picked 24 except for because of the earnings thing. Remember we kept talking about that? Like, earnings oddly is a lot of times at 24, and for like almost a year and a half, earnings back here kept being at 24. Like, it was just very consistently like at the same price when it was at earnings, no matter what was where it was right before. It just kept going back to like 24. We did it for like 2 years or something ridiculous, year and a, it was like 18 months or something. We talked about that because then when Ryan Cohen diluted, he didn't do it until it was above 24. It's like he used that as a support. So I guess looking at that, it is a very significant level in that regard. And when I go back and I check out in the big picture, it would be hard to deny that that's been super important. To be at 24 would be very significant. It has acted historically as a really important support. So, yeah, I mean, 2310 was the number that I picked, but if you recall, 2310 and 26 were like circumnavigating. It was like right around this level. So it may make perfect sense to come back to 24. Like, it wouldn't necessarily be a bad thing, okay? So we'll keep that in mind as we look at this. It's possible. And then I think when we looked at that retracement, I had it at like 2350. I just changed it, but it's basically right where this breakout happened here. So maybe we're at 24 on earnings again, and this is the head and shoulder that's going to get us there. Seems pretty straightforward. That's a possibility. Definitely seems possible that happens. In which case, I don't think we're going to see much divergence at all. This looks like it would hook, but then drop low. So this would be like a 50-50 drop on like 4 hour. So what the 1 hour would probably look like if that happens is there wouldn't be any kind of divergence here. If you get the pop, so be it, but then it probably dies pretty quick. So it may only come up to like near 50, and then it would probably just drop and do it again. It'd be like LSPYs. So you'd end up with a another one when it hits this point. You get like a rebound that hooks again, and then you drop again and come low. Yeah, and there's a lot of chop here. So there could be some chop on the bottom, kind of like this guy right there, where you get that, see that sell-off? This is like halfway through the sell-off, but on the RSI, it's already like really low, and it's just chopping low. It would be something like that, where you get this like pop-up, but then it drops and starts chopping down. That's a good example. That would be my expectation if this dropped again. If there's no pop, I think it'd be a bit odd, because it'd be weird to not check this right now that you have the opportunity with the symmetry there, and you have very low volume. It's an easy enough time to just try it again, get the other shoulder. It'd be weird if it didn't today, or even just early tomorrow, frankly. So I wouldn't be surprised if they delayed it, but it would be bizarre if it didn't even try to do it at all. So if you're looking for an exit short term, that might be a really good place to consider an exit short term right underneath 30. And then I think we head back to 26, and then probably, just depends on what happens, but probably going into next week, it's hard to say. Maybe that's where we drop to 24. If there is a divergence and it holds, That's a big if. But if there is a divergence here, meaning that it comes lower and it does hit this bottom, and for whatever reason it does hold it, you might not see that. We might see something quite the opposite, because sometimes on these movements, this is where you get that rotational symmetry on the reverse side, like here to here. Sometimes you get this simple, because that would be like an elaborate complex head and shoulder if it broke down, because you'd have like a breakdown and then another shoulder here that would signify like that one, and there'd be like another wave here that would break, meaning this neckline to this neckline, and you'd have another like rounded shoulder here. It just kind of keeps layering down like a fan. But if there's a divergence, sometimes that builds back out, and this is what happens in the case of like a Wyckofian range, because it looks like a head and shoulder at first, and then you actually get a build back out to the upside, and if that were to occur, you could have it break back to the upside going into earnings. We'd have to wait and see what happens if this pops and drops. It may not even drop very much, and that's the thing. We don't really know until we get there. I'm just saying it looks like it would go there, but it may not. Maybe that it holds high, it never comes back below the neck. You could hold at 27 and then just go. But what's fascinating is that when you look at it that way, then it's possible to view this as not a head and shoulder, but actually as a falling wedge that's really targeting that pullback to 25. So if that were the case, that wedge could come down and frankly still be similar going into earnings. You could have it still kind of drop. Maybe this is what we see in terms of like movement. Maybe we don't actually hit that bottom again, but it does have a pop, and it still maintains, again, that divergence going into earnings or whatever. The typical rule of thumb is about a 60%, and I don't like fib time things, but I'll use it because we need to use it. Where's the timing one that doesn't have? No, I'm not going to do that one. Forget that. I'm going to use the arc. I like that one better anyways. I think it's the wedge. This is weird. I always do this like weird. This is a way to measure distance over time. I know it looks weird, but it's okay. Basically what I'm doing is from the original entry point or the first hit, something like that, roughly where that wedge begins, if it does wedge. You can have a marker that signifies where the 618 is, and that's right here. And usually about 68% of the distance, if it breaks out early, it's going to be strong. That's where it would happen. So actually, the way we guessed was pretty good. We had a pretty decent estimation here, which is the 10th. This is after hours. So that's like the idea that it gets there and then it breaks out to the upside. Again, potentially, maybe going into extended hours or something like that. And there's a big run up that day. It doesn't have to look exactly like this. I'm guessing that is not a very big move though. The triangle itself, it looks like a weak move. Yeah, like it would only come back up to 32. But, we've talked about it before. That's not really unusual. It's basically just a perfect retracement right now. If it comes down to 26 and then it does a 618 break or 62% move above the top breakout here, it would take you right back to the top. So mathematically, it's usually like something like that. You get back to the top on earnings, and then you probably the next day, who knows, you could get a rug pull. This looks about right though for like secondary action. I think we'd have to just wait to see what that does here on the chop, but it may end up being that this doesn't, ultimately RSI doesn't get to this retest until this pop, and then it finally goes back up and checks that top. here. At which point, if it does do a swing, let's see what that target would be. $39.29. So that's on point because that would be where we would expect there to be a secondary move right there. That's pretty close, if not right on the money. I mean, it's actually kind of like right there off that top. So my estimation is that if this does pop, I mean, it's right where we had the other one. That's pretty good. That's a good thing. If it does do that 50-50 swing, I think you could see it go all the way up to, so this is a maybe. If it holds here, I think it goes all the way up to the top. And we'll see what happens. That kind of business right there. I mean, say whatever you want to say, but it's certainly set up in a way that it gives you a lot of reason. We can look back here at this original interaction. There's a very, very clear breakdown right here, right off of 39. It's not quite 40. It looks like the low was 39, the high was 41.01. So it created like a $1, $2 candle, and then the closing value is 39.55. And it looks like that's really close to our 39.32, which is more similar to the opening value, 39.32. So let's see. So let's do 39.37. And that's super close, so we're just going to use that opening value, and then the closing value of 39.55, which are pretty much the same. I think that's probably the target. That's the M cross on the way down. So this is just a weakness, and then it found support, and then it hooks beneath it. So that is where that is. And then you can see here, this is just distribution along that top. So 39.55 is that level. We could split the difference between those opening and closing values, but it's pretty minimal. It's like a small range. That's a pretty decent top anyways. You don't need it perfect. So I think if we're going to do any kind of swing to the upside, that would be the target. And that does fall in line with what we saw before on my crazy chart, which was that same pocket right there. It's pretty much the exact same. Easy to draw the same conclusions when you have similar ways of doing things, but I mean, the fact of the matter is that intersection happens right here on December 11th. So maybe that was already baked into it, but it seems to me that that's pretty significant. That would be the after hours kind of move. Maybe it opens really high on the 11th or something. Not sure. I would venture that it's something like that though. Like there's a gap up or something crazy. This is sort of going the opposite way that we expected right now. So who knows? So you're wrong? I don't know. Maybe. I can see it pushing up in like that extended hours period and then just kind of tanking if there's a gap. Or like trying to hold the gap maybe at first. So like opens at the top of the gap or something. Maybe there's a top of the gap at like 35 and then it tries to hold the top of the gap and tries to go back to the top for a few days and then it eventually breaks down. Why can't it keep running? I mean, it could, but that's like the most reasonable target I have. I mean, it's not impossible. It does it again. I just think when you look at this as a single wave, that's enough. And then I suppose if it did it again, I don't know, maybe 60, but I don't really know why we would go back up to 60. This is the intersection of that big, gigantic, I mean, this just goes back to the top, the previous top, but it really is the intersection of the big uptrend, the big middle right here. So more than likely, if we did have something like this and it didn't do any kind of breakdown to 24, you've already kind of been developing it, though we're not really talking about it very much. You're already like generating, like there's a mild difference in the trend here as well. That could be part of this interaction, but you should be developing like another, off this bottom, you'd be developing like another wave or another bottom. So like from here, if this did come low, just again, hypotheticals, and then it broke out on the wedge, later when you retrace, you'd probably end up back down here before too long. And I don't know exactly how long this run might last. I talked about maybe going to the end of December on some charts. On other charts, it looks like it wouldn't go that long. But perhaps that could be the argument, that it has this big burst to the upside. Maybe that's a good way to argue that it actually goes way higher, is that it's going to continue through the 30th or something. I don't know. But somewhere around the beginning of the year, I would expect it to be done. So maybe it kind of piddles on the top. If it's being sold off, you'd probably have a lot more price action here, trying to hold it up into the new year. That's a speculation, right? And then you'd drop it here. And so this is where you'd come back to find support again at 29 at this top. If that just really gapped up and just ran up, then you'd have a lot of reason that you would come back here. So it makes sense to me. That's probably the best I'm going to do in terms of estimating earnings. You know, going to 24, it's sort of the same deal. It doesn't really make a huge difference to me because it could still bounce either way. I think 24 is a bit more likely because of the overall setup and the fact that it would do really well if it's going to run far to go off of 24 and run off of there. It's probably a good retracement value on this. It's probably close to like a 7 or 6.8. Yeah, it's like right at the golden pocket. 618 to 65. It's very good retracement value wise, and there's a head and shoulder target there. So we could do that and then use that as a like an Elliott wave for a fib extension. So if we go to the 618, this might give you a reason to go back to 50. So this goes up to 49.88. That's pretty close. That's right at under 50. So yeah, so I mean, if you're looking for that bigger wave, going down to 24 might actually be better. It's kind of like what we were talking about with AMC. it gives you a stronger chance of going higher if you go lower. If you stayed high, I don't think you necessarily go above 39. Oddly, seems a little backwards, but that's just the way it is. If you go to 24, there's a decent chance this thing could run all the way up, I believe, to like near 50. Maybe it's a much more extended move, like a longer term move going into the end of the year to like 50. Might make sense. I could see that. We did this something similar back here off of 24. We ran all the way up to 50. So this was going into earnings, but who knows? I mean, if it gets there fast enough, it could still be going into earnings. This was a really rapid fire move. It only took a few days. So we'll see. I like it. I mean, I'd be really happy either way, guys. If it went up high going into earnings or right after, I'd be happy. I think my biggest concern is just lately it's not been the case. It's been dumping on earnings, so almost all of these have had some reaction, but they're more often than not, they're kind of going down right after earnings. Like even if it flushes down and back up, it starts going down. It's just a rough one. You'd have to flip the script a little bit to pop after earnings. So being above 24, I know I'm like speculating a lot. The timing of these things is innocuous. It almost doesn't really matter in some ways. It's more about the prices. If you keep the prices in mind, you'll be good. Because you'll know like where the sell zones are, where the buy zones might be, and where the breakdowns might be. And that's the most important thing anyways. This whole like spiel of me doing this kind of stuff is more speculation about the way the price often moves. Is the math like good? Does it make sense? If it does, okay, maybe there's more probability it moves that way. And if it doesn't, then maybe there's less probability that it moves that way. You know? So I'll look at this and I'll see this as like a possibility of maybe a flush low for 24 followed by a pop. But I don't want to take it any further than that right now. And then if it holds 26 or 25.90s, whatever it is, then we could see an early break going into earnings of this wedge that takes you back up to 32, and it might have a swing then to 39. I still am a little bit more inclined, at least at this point, to the downside after that if it doesn't drop to 24. I think 24 is a really big deal. I think if we can get to 24, then it may have a much bigger move. Maybe there's a greater chance for like 50. So yeah, kind of a dead day today. We've done a lot of charting, but there's not really been a lot of price action to talk about. AMC's been chilling out, 45. Isn't that your magic bullet number, Booksy? Yeah, I mean, it is, but I don't know. I don't think about it all the time. It's as magic as a magic bullet can get. Stop saying magic, Booksy. Well, my theory is based on the relationship between the stiletto-looking move and which is the shallow S-curve drops, these things, where it kind of reacts and then drops again. And then it has to do a lot with the values on these two reports that were made by Vanguard at 45. And I had talked about it a long time ago when we first came down that it should be the anchor for most of the range. Therefore, when we leave, we should at some point hit 485 and then just take off to the upside. Do I think that's happening right now? No, not really. Um, if it is great, we'll just take off. But we already kind of mentioned this before, but I think it would do well. It would do better for us, be better for us to come lower, much like GME. If this comes lower into that earnings report, then it's going to be better for us, believe it or not, because it gives you a greater extension on the fib, and it could be that this is a larger wave. If it doesn't, and we just take off, we may get stuck. And somebody mentioned that distribution happening, or that of shares, like the offering happening at 566 or something. Well, 565 was one of the wave targets, so it's absolutely not out of the question that we bonk our heads on that. I'm a bit concerned. I think if we don't go down low, we're probably going to stop a little short, and only pop to like 570, and then we'll have to back up and go one more time, and then we may not get much above 6. This would kind of go out the window. Meaning like we would stop here and then chop for a while, and then maybe we go up later, maybe, to like 6 or something, and then that would be the whole move. I don't like that as much for obvious reasons. But I think that when you look at the bigger picture, it's like GME. We just looked at it. It would do better if it pulls back farther. It actually would, because if it resets the wave, if this reset the wave and then this ends up being like a bigger move up down, or a smaller move up down, then it doesn't look as good as when it's a bigger move all the way up and down. I know it's confusing. It probably made no sense the way I said that. But this would be a retest of a lot of things, and it would ultimately probably yield a bigger push. So that's what I'm going to hope for. So I don't necessarily think it's going to bounce right here. But, I've said it before, and I'll keep saying it. I do think that that's a very important level. And you look back at where the breakdown happened back here, we're basically on top of it. When we talk about pushing resistance and then backing up for support, this is exactly what we mean. This was the high on this resistance back here, right around 510, thereabouts. We pushed up. Now all we have to do is build a support. Where was the support back here? It was at 462. That's where the support was. So if we've pushed up higher and then we can maintain this level here, ideally, I think this was like the 0.5 was like right above here. This green zone was like the 0.5 retrace. Holding onto that would be really strong, because you've made an advance above the resistance, and then you back up and you hold the support. That's a classic bottoming action. Right? Come down, hold support, or come down and you basically make a hook, you drop low. And then when you return, if you advance and then also hold that bottom, it doesn't have to be a double bottom, but often it's similar, like they're close. It's like an inverted head and shoulder, basically. It's a change of direction, right? So you've essentially made a higher high here. If you listen to me long enough, you hear a lot of the same things, but I think that's important. Some things are worth repeating. And this is one of those patterns that's, again, it's not exclusive to AMC. It's just a simple bottoming. It's a reversal pattern, and it's a really good one. This is one that if you trade like an ETF or something, and you see something like this off of a bottom and it jumps the creek, super simple trade. It is. And then usually if you're fortunate enough to have some kind of a wave trajectory, then you've got a price target in mind. So, that's not always the case, but sometimes you'll have a really good wave trajectory that you can use, from a previous setup. And then you've got a really straightforward, like buy here, sell here kind of a trade. This is the trade. So if it makes an advancement and it pushes a higher high after breaking the creek, that's typically a very bullish sign, because it means that I'm fixing my chart so it looks more accurate. It means that you're changing direction. The trend is no longer down. Now you've made a reversal. It's made a higher high. So now there's an uptrend motion. So the rest of this is a little more speculative, but typically like what we see is that when you come back, if and when you come back to check that creek, if that happens, this usually coincides pretty well with what we would see as like an inverted head and shoulder. And in this little doodle I just made, it looks pretty perfect. In ours, in our current time frame, I'm not sure. We can flip it upside down. Maybe it helps visualize it a little better. Yeah, I mean, it's so obvious. You can see it upside down like it's painfully obvious. I was saying this before, like, I know I had an argument the other day with a JP, but I was like, why would you not come back? You know, it doesn't make any sense. I love looking at charts upside down, man. It's like so much simpler sometimes. I see AMC going back down to $2 and then eventually going all the way up to 80. Yeah, I mean, you break this into basic components. This is a wave. It's trying to it's sort of like a UTAD in reverse, right? Because you're trying to come back up. If you look at it in reverse, that's like almost like a spring action, and it's failing and it's broken back through. It looks good, but you would expect there to be a check back here. Like this just hasn't happened. I was saying that earlier. It just doesn't make any sense to not do that. If it's a complex head and shoulder, which I hope it's not, this could end up being really choppy, like this side. I hope it's not like that, but you never know. Like I think we're going to get a pop and we're going to rally into the new year, but I don't think we're going to go that far. And then I think we're going to drop pretty much till summer, all the way back down to 2. Guys, it's not, don't get offended if you don't think it's going to go there. If you don't think it's going to go there, you just disagree with me. It's okay. But don't tell me, like, also don't tell me I'm wrong yet, because it hasn't happened yet. You know? Let's just be patient and see. If it happens, then later you can be like, okay, Booksy, you were right. And if it doesn't happen, then later you can be like, okay, Booksy, you were wrong. It's okay. For some reason, anytime I bring up like low targets or whatever, there's always somebody out there who gets really like upset or like doesn't understand it and they don't know why I'm saying those things. Why have you changed your mind? Why aren't you talking about 8s and 9s? Why aren't you talking about 13s? Well, those were always targets that I thought about, but I was thinking about them in terms of like UTADs, you know, not in terms of anything else. So for me, it's like, it's not complicated. It's just, it's always been the case that I personally thought that was likely to happen. I don't really know why we would have come down here and not traded it unless we're planning on coming back. And you can go back and look at plenty of examples on AMC where it hits a low, it bounces out, sells off, and then goes back down again later. It depends on the strength of the stock, of course. There's a lot of factors at play, but I would say that it's fairly straightforward from a TA perspective. I don't know if there's a lot of need for argument there. Yeah, so I see this as like repeated pushes. So there was some dispute perhaps in the beginning until this double bottom. I mean, really that, I can't stress enough how much that 417 changes this whole thing for me. And I talk about it so much, it's almost annoying, but like, it's so significant that this didn't go lower here because it was repeatedly pushing higher. And if it had repeatedly pushed lower as well, there really wouldn't have been any way of telling direction. But because this kept pushing resistance, you can see here, like, there's another one right there. This one was pushed repeatedly right here. Ultimately, that's where the gap is too. And this is one right here that we had like made a, if you're looking at it in inversion, and I am, you can see there's like it looks like a support, right? It's actually supply. And then you can see when it comes back down, it's rejected right there at first. it tries to quote unquote advance on the bear side, but almost immediately it has a sign of weakness on the bear side. This guy, when it pops through right there. And I think that's really cool to like kind of go back and see it. But we were looking at it saying the same things at the time. It's just hard to, when you're in the moment, it's like, man, it's going all over the place, right? And then you're waiting to see what happens, and thankfully it doesn't go below. Because if it had made a lower low here, it would have been, again, a weakness. It does push pretty far. Like it went away from, this was right on earnings. It went lower than this 436. It went down to like the 415s or whatever. But then it immediately came back again and made a higher high here after making a double bottom. That just changes a lot of stuff. Then it looks like an impulse 1, 2, 3, 4, 5 kind of thing. You're kind of moving the other way. And again, you've got another push on resistance. Once again, right here. On this push, that again would be seen, in my opinion, based on the volume, I don't think you would conclude that this is a top. It is, again, once again, pushing the resistance. So, and you're just looking at those levels and determining where you think that's going to be. And it's pretty straightforward to me anyways. I think it seems to make sense that this would come back to here, at least. Maybe it does get the gap, maybe it doesn't. This, when it's pulled back, it did go higher than the previous top. So I'm not sure if that motif is still at play. But at the best case scenario is like 465, which is what I was saying in the Discord groups. Like probably 460s, if it goes kind of according to like where this is, you'd expect that to be the zone. But it could technically go pretty far. It could go like 450 here, since this is like very wide. Anyways, that's just an inverted head and shoulders setup. I wish there was like a better way to be like 100% sure about where it goes, but there's just not. We could probably use a series of like parallel kind of things, or look at maybe this high over here and like where it might go if it, again, they're all kind of like the same thing though. They're all sort of leading you back to 460s, and then maybe if you dropped it, maybe going up to 450s. It's not really any different. Once that check happens though, I think there's a strong chance, maybe it's a sympathy move, I don't care what you want to call it, it's in the technical setup. And then you have a chance of sliding down through these other barriers. And we'll just see what happens. Yeah, and it may seem a little bit unfair, again, to only think we're only going to go to like 6 or something. But this is the cat ear right there. Ugly, and it is ugly. Ugly as it may be, and it is ugly. That's it. So it's really ugly. It goes to that 13th marker. So I don't think it's a very complicated move. Yeah. I think this is just a sign of weakness, to be honest. Like, that's what it looks like to me. It's kind of like what happened with GME, but it isn't in reverse. And then you look at if you remember, GME has that compression down. This is where the breakout happens. So it's pretty evident that this is just a weakness that's saying, hey, we want to go lower. And then that we knew that when it happened, it was ugly, because it went from this and flushed and then yada, yada, yada. So this was that head up thrust. But the whole, it's very simple. If you kind of look at it that way, then this is just like an S-curve down. And the last part of this is just like the wave, the rest of the wave here. So this would have been like a stretch to the downside. It's just so bizarre looking. But it's fairly straightforward. Like that. It gives us a lot of evidence for coming back to, I mean, it's a good case for coming back to here, like now, because, and we're doing this in reverse because sometimes it just takes away some of that bias, but it really is a good case for why if this works out and it holds at 460s or 450s and then it comes back down, why you would expect to see a maybe an S-curve here going backwards, why it would go right back to this marker. I find that to be a really simple, straightforward setup as it stands. With a secondary option to maybe stop at 550s, which kind of stinks, but I can't make the chart better than it is. Kind of curious about this one from way back. We haven't really looked at this in a while. I'm just interested to see where this one goes. Yeah, that's interesting. We're sitting on it right now. Maybe I'll make it like a different color. I don't have a lot of yellow right now. Let's use yellow. It's harder to see. You know, I wish these purple colors were like brighter. You make them brighter, they all look pink. They all look the same. TANH is crossing 1576 or something. I'll go check it out. Yeah, it looks like it's chopping, like it's trying to gain support or trying to break through this. Here. It's interesting. And it's really bizarre to me because now I'm looking at this as like a flush and I'm like, it's weird how that's flushing up and down through that same marker right there on the 12th here. And then maybe finding support on it. It's really strange because that's the same as this other wave. And that is what I would expect to have happen if it does push, that it would look like that. I don't know. I think that's really interesting. Maybe you don't think that's interesting, but I do. It's just one of those little synchronocrities, I guess. Well, that's it for Upside Down Land for now. Didn't really come to any new conclusions, just kind of interesting to look at it. It would make sense to come back here and test this at 6 in that multi-hour setup. Why did I mark off TANH at 15 something? I don't remember. I think I said I thought we did this yesterday or something. I should know. This is the weekly. It looks pretty good on the weekly. Like the crosses up here. Yeah, maybe. Why did I do that? Oh, because I said I thought it was maybe a head fake. And then it might come back down through 1576. But man, it dipped and then pushed right back up, didn't it? It's weird. All right, so I think this is a really good setup if it breaks or holds, it doesn't really matter. So fascinating. Yeah, I was saying yesterday I thought it would come up high, and it did. It hit that mark like right on the button. Good for you, Booksy. Did you trade it? Nope. But if I traded it, I would have had to get out right away because that's like the opening price, and they just dropped all day. So now it's down almost 3%. So what this last part is it's a retest of what this bid is a retest of the trend, which was also expected. So we were expecting it would come back through and then drop low to come back and check it. And then the question was, does it hold above 16 or not? And if it can, it may just break out and go again. And if not, then I think we're going to see it chop down low going into pretty much like mid-December and then break out in like a violent fashion. There's a lot of reasons that might create like a huge move. We're not going to go into that again on TANH, but it's a huge move. It's like a very big move. So I want to say that we were estimating like 300% or something potentially, which is insane. But it is a big move, and there's ultimately like a target out here around the end of December. Once again, like a Santa rally kind of deal going to 23 cents. Doesn't seem to matter which way it goes. It would get there all the same. But one would be much more violent, I suppose, than the other. So I'm going to adjust this a little bit. Yeah, I think this is a good, a really good setup for potential like. I didn't do this all that well though. I could have set this up a little bit better. Not sure. That would definitely hold here and then have to drop if it's going to go down. The rest of this I'm not too sure about, but seems kind of unrealistic. But I mean, the upper targets are there. It was an iterative move, so I'm going to do it again. I'm going to add another alert here around 15 cents, and then I'll add another one up here around 17 cents. So I'm just kind of bracketing it because I think if it drops below again, it's probably going to stay below. I might even go to a lower low, like do 1540s. That way I can just bring my attention back to it when and if it goes down that way. So, right. So this is repeated attempts to up thrust that are failing to jump the creek. It didn't jump the creek, but it intersected right where we thought it would, which is good. And then we were expecting it to come back down, and that happened. So that's good too. It's right where it needs to be. Now the good thing about this is it's done it twice. So it did one right here on this breakdown. It hit it. If this backs up and it continues, then the expectation should be that it would go to the next one, which is very likely. Yeah, I think we were talking about these drops. It's kind of complicated because there's some. It's always complicated, right? There was some nuance in this drop. This chart's weird because if you switch between the daily and the other, it flip-flops with the split values or whatnot. But I think we were saying that the next one should be here and then potentially higher. So if it can hold, it may push all the way up to the next one at 24 and then all the way up again to about 53 cents, which is a big move. So yeah, we'll see. Not that much to require here for the move. I think the only thing I'm worried about, I guess, is that maybe it goes really fast. I don't know what would happen if it jumped above here. It'd be very different if this like moved way up. We didn't really explore that. I don't really think I will, but it could be like an SOS type deal early. It's not impossible. It could come to this place a little earlier. So we'll watch it. It's a good trade setup. I like this better than some of the others that we've had. I mean, WTO has largely just been kind of dead. It dropped 17%, geez. So it had a fake breakout, is what happened. This just looks like a distribution right now because it didn't hold. It's going to end up closing beneath, far beneath the level. So did not push to a higher high. It pushed to a lower high. It did break through the resistance. But unfortunately, like, this is one of those examples of like where you kind of don't want it to move too fast. Because like if this had come up and just advanced to here and then backed up, been a greater chance that this would have held that support. Instead, it just gets this nasty sell down. It tried to advance too fast, like all at once. So it's as if you scoot this over and you're like, So once again, it's like it's come back to this creek that it's just sliding. So what I'd be watching for now is that it's shot up above here, sold right back down beneath 36. It looks so-so. Honestly, it looks like it broke that trend too. So it's ugly, guys. I wish it wasn't, but it's a frustrating setup. You know, we first looked at this, there was a lot of things that I assumed about the nature of the bottom, but then I didn't take into strong enough consideration the split value and what that did back here. And I think there was a trade built into this that happened right here with this stiletto coming up that it just kind of failed to advance. And this is really like that point at which you're kind of done with the trade usually. We kind of held on to it too long. Ultimately its goal seems to have been to trade across 36 cents, meaning like that's where it found a lot of people trading. You can see the wrap here on this S curve. There seems to be enough people willing to trade between like 46 and 29 that it's been camping here for a long time. Unfortunately, what it's doing right now, these up thrusts with sell-offs, up thrusts with sell-offs, it really just looks like it's failing. You know, if you take away all the flare that I have in these charts sometimes, and you look at just like what's going on, it's just a big turn. You know, this was trying to find support on top of 40 cents, and now it's struggling to get back above it. So I think I've said this a couple different ways, but if this doesn't come back above and hold above, there's no trade here. Not really. It's kind of a bummer, but it is what it is. I'm not happy about it, you know. If we look at something like RSI, we might get maybe a different glimpse at what could be happening as a turnaround, as it does seem to be like struggling on some levels, you know. The issue again is like, where is this resetting? It's getting to an overbought position at 40 cents. And previously when it was like almost overbought, it was up here at like 50 cents. So it just keeps dropping, lowering the bar. It's struggling to kind of turn around. You're getting some divergences in some of these bottoms, but this kind of erased a lot of it right here. The market's correcting it as it's going. And if this can manage to stay above, this could be like an auto reaction in a phase B. If this can manage to stay within this little area down bottom pretty tight, you might still see some good, but it's a weak phase B, you know. And there's really no way to justify dropping beneath this price again. If it's kind of what we thought it was, where we were thinking it was going to do this and it's just swinging heavier, then within the next few days you would see a reaction probably back to the upside around, again, coming up here to around 47 cents, maybe to test this moving average and this hook. You might get one more push, you know. So I would be really careful on this one now. I think that At some point, you're just like in a losing trade. You know, you don't want to be in a losing trade forever. Kind of hoping for that breakout. It's made its way across here. It looks like a jump that just comes back to check, but it's come really deep. There's not a lot of stopping power. That makes me nervous, right? Ideally, this would have stopped on top of this outer mark. Instead, it's come down really low, and it's testing it. So if the next moves are not coming back out and building back out, if the next moves are instead like a chop that ultimately fails to advance, and it would be here, you're going to be really careful about a hook underneath 34 cents, because that could send you into like a tailspin slide right there, right at this level. It's going to be ugly if it does that. If it manages to come back, I don't see why this couldn't push up from here. But if it does drop low, yeah, I think it's just going to test the lows again. So I'll have to go from there. There is no major rejection off of 35 yet, so that also could play into this a bit. Like, it didn't actually reject off 35 very much, it just kind of slid through it. And 35 has been the anchor here, so maybe, you know, maybe it got to hit 35 again before it leaves, if it's going to go down. This kind of chart's hard to chart. It's a penny stock. It doesn't always move the way you think it should move. It's kind of the Wild West. They will obey TA at times, and then it won't at times, and you're like, well, it's not because it's overly manipulated. It's because there's not a lot of maybe not a lot of smart money in it, and that's debatable. Because sometimes they're being shorted down to you know. There's more failing companies in the world than there are winning companies, which is the whole idea of hedge funds, right? In a lot of ways, is if statistically there's more companies that fail in the market, then you do better to hedge with those multiple companies that don't succeed, right? You're really only bullish on the best. What am I looking at here with HKD? And then Kyle said VVOS. I mean, like, it kind of looked like it's trying to maybe change direction. I'm not sure what HKD is about, so just digital. I'm not really sure what that means. Just trying to see what it looked like without logarithmic on. All right, so just from a glance, really quickly, when you see stuff like this, where you're getting like up thrusts and that they're just followed by new lows, that's just exactly what it is. So like every time this thing has come up and up thrust, it's been followed by like an S curve down, S curve down, S curve down. It's pretty consistently just selling off. So these pops that you see, these big run-ups, they look kind of attractive for us as a trader, because you're like, oh, here's an opportunity to get in and make a quick like buck, but they're very infrequent. It's like penny stock trading, because you're basically buying in and then just waiting for a pop to get out, and everybody's doing the same thing. The Problem is that you never really know which pop's going to lead you to a massive slide. There is a slight change of character here because this is not a pop that went to new lows, for one, not yet. And then it also made a new high. So you can see like the previous pops did not. They always popped and then made a new low. This is a slightly higher high here. It might be one of the better examples, I guess, that we could use. I can't even really tell. $9.19, $9.20. So it went like slightly higher back here on the second pop, but they're pretty much the same. And then volume, yeah, there's a big volume spike here. So I don't know, it's a weird chart. It's become more regular. This looks really weird up here, like mechanical, hard to trade, garbage basically. And then it looks a little more regular, like it's finding a lot more volume here. So that's probably why you're getting a lot more regular trading happening, which is good and bad. Institutions like to have a lot of shorts. They like to have a lot of longs because the more money that's in it, the more money can be made. If it doesn't have a lot of retail interest, they probably won't trade it very much. It's not valuable enough. So the MO here has just largely been that motif of like pump and then sell, pump and then sell. So you take that macro analysis and you apply it to maybe a micro level, and that gives you an idea of how this may trade on a more micro scale, and then you can go from there and just sort of determine whether it's a good trade or not based on that. I think what you're probably looking at here is just a series of simple, like, get in, get out momentum trades. I don't see anything here that would make me think this is some kind of a great trade. Let's take a look at where this went to last time. See if we can find some continuity in that. Right here. So this is where that breakdown happens. So you can see the support and then resistance off of this bottom. And then when you get up top, this is where you have the same thing happening here. You see that at first it doesn't look like it's going to that target. You're like, well, why didn't you pick something higher? Well, this just overshot the target, you know? But you can see, like, it's very evident when you zoom in. It should be right. It is. You can see like that effort to like drive the price up and then back down through it here. There's basically like a head and shoulder right underneath it. So the target itself is not way up here, although it did make a higher high. I'm sure there's a way we could find it, but I'm not going to do that. I'm just going to look at where is that line. The reason for that is that should exist elsewhere, you know, and usually what we find is that ends up being a defining factor of this whole movement. So like you see the same thing here where that ends up being like the major, just like this big one, just like this one up here, that ends up being like a major point of contention. So that's being used. So the reason I'm mentioning that is because in theory, if this is going to pop again, you should have something similar to look at, right? And we've got this one, which really was just kind of used as a shoulder mark. It may come back to that, but I think, yeah, I mean, this is a high trajectory. So where is it? This is like the Where's Waldo of charting. I'm going to flip it. So the fact that this is widening is kind of significant because just is. Because it almost seems like once this was established, when this hit, it goes on and on. Like this could go on forever. Obviously, this is just a line. But it's not really where the resistance is anymore, or I should say the support, since we're upside down. Since this was like widening out, what this reminds me of is like a double flush. So like if you look at it from that point of view, this motion below and then this motion above kind of match. Yeah, I would say that they do. You see that? And then there's it's just longer, but it's actually the same spot. So if you look at where this hits the mark off this top, and then where this jumps off the bottom, it gives you a target. And typically like a widening goes back to the beginning. So like if it breaks down, if the widening started here, that's where it would go to if it broke down. What's interesting is that this first goes up for liquidity, and it's fascinating to me to continually run into the same thing over and over. Like the upward motion mirrors the downward motion. It's almost like they're just intentionally trying to get sellers on board, and then they're going to have that liquidity to drive it back down. And then we come back to this creek, which is fine and dandy, but in doing so, it looks like we've generated a bit of a wedge. So it's a mirrored motion. I think it's a narrowing. It looks like a narrowing. It's not the best, but it's decent. And it started here. So here to here. So that could be a good measurement tool for a possible rebound. I'm going to flip it back now. It looks like what bulls would be looking for would be this rebound back to this breakdown value. So it's estimated around 62, which is like a 618 value. It genuinely just looks like it's like a return back to here where it broke down, which is interesting because that was the value that we picked out at first when we were talking about this breakdown right there. I created like a star. Get behind me, Satan. I don't want none of that. None of that devil worship. Nothing. You guys are like, it's just a star, Bugsy. Yeah, I know. But then you'll talk about goats and all kinds of weird stuff happens. So we don't want to do that. This would be like a pivot right here on those trajectories. There. It's weird because you're like, where did that come from? It's these two trajectories going up. 1, 2. And we did the widening just to measure it, but if you look at them as just like upward trajectories, that's like a pivot on an anchor. So maybe, big maybe, if this has a good reaction, maybe by January it could be back up, or December 31st at 460. So I had given it some crap, but it was because it just didn't look very good. The issue with this is it's hard to tell with this kind of stuff how it would move. It's just such a volatile stock. So it could have like no movement at all and then all of a sudden just pop. And you're like, okay, it's just one of those things. It also kind of reminds me of GME because it's almost like flattening out. I'm not a big fan of that motion. I find it to be very unsettling because we've seen a lot of that curtain stuff where it kind of comes down, flattens out, and then dies. So I think what we're seeing is like a competing waves of one is going up like this way and one is going down. It's weird. It looks like a fish, but that is kind of what I'm seeing here. And it's a bit bizarre to do it that way, but this is probably a larger wave too. Yeah. That's interesting. Where does this go back to? This goes way back to like this. Way over here. M crossed down. So this jumped that creek and then landed on it. That's caused like this big reaction. Interesting. It's like an inverted pivot. That's weird, man. That's like right on that cross too. That's super strange. Oh, that does bring a lot of light to this though. When you look at it like that, you can see you can see that rejection and how this all built out. Wow. So I think what we're seeing is like a momentum of this being like a 50-50 kind of swing around that curve. I think they're going to try to kill it and squash it, but it may very well not happen until it comes back up. When I say they, I'm saying whoever the short sellers are probably expecting some kind of another reaction back up to 4 or 5. It's a decent trade. I think there's a decent probability this could go back up to 4 or 5 again. I'm not just saying that. Historically, if you have a wave cross, it may not be the prettiest thing, but it usually is in like the middle. If you have an M cross, I mean, it's usually in the middle of like a wave. So from that perspective, the only danger I would suggest right now with this whole thing is that it's in a big flush. So this is a big danger, is that it could be flushing really far, but that doesn't mean it couldn't come back. We talked about this before on AMC. It's kind of like that might ultimately be the goal, is to take it down here, but it doesn't mean that it couldn't go up first and then do it, which is strange to think about. It may fail, like it may have this kind of reversal that just fails to go that far. It's hard to say, man. This is a tough one. But even in this, it kind of looks like it needs it. Higher highs, then it pushed below. So that's like a breakdown. Or breakout. Maybe. And this would actually be like a bottom. And then it just goes hard the other way. Like, Yeah, that's kind of... Let me see if that makes any sense. Yeah, it kind of makes sense because in the... I mean, maybe a little bit dramatic with how far down this goes, but it wouldn't be out of the question that this comes lower. One of those could be like 240 because that's a low, but then if you look at the big picture, dang. Yeah, they're trying to get down to... Bears are pointing towards like $2. So this would be seen as like a distribution one and then a UTAD. So UTAD, drop. So decent chance it goes to like 280s or something and then bounces and then I'm not sure why it would only go there, but I'd have to do some other stuff with this. Maybe this guy. That chop right there. Yeah, that's the one. It's a different kind of line. It's like a cat ear top line. I use these sometimes. I did this on AMC as well. Like whenever it develops these really harsh trends on the cat ear before breakdown, you should kind of consider that. So my thought, and I don't know if it's going to make it all the way. Like I said, it could kind of pop and not make it, but my thought is that it's probably going to come down to like 280s. It looks like it's widening and like having trouble anyways. Like it's turning down a bit. My thought is it's going to chop down low. Probably. And then it's going to have like a hard reversal and like work its way back out. Maybe by the end of the year. This would come up slightly above 379. And then chop low and maybe have one more pop in it. This would only have to come slightly above here. This is a lot of assumption because I'm still thinking like it's going to do this first. The point of this would be to get us up here just to sell off again before the new year. And then I think a massive sell-off ensues. It's kind of ugly looking, but it honestly could be really fast. And the weird thing about it, I always think about this stuff and then I have to like go back and look at whether this makes sense on the short term, and it does because of the jump. But then if you look at the 50% to the upside from this bottom, in theory, this should have like a creek. It could be like right there. It doesn't have to be perfect, but what this would be like an M cross here, kind of in like the middle of the creek. It should define like the middle of that move. That makes sense. And then coming down, it would have to break below that. And you can see where that intersection is kind of right on it. And this would be like the 50%. So this kind of suggests it could be, it may not get there at this time, that it may not get there till like much later. This is too fast. So instead of this, it has like a longer breakdown here and then drops like later on. It does get to the target, but it doesn't get there that fast. And that kind of makes more sense to me anyways, because this would need to come back up. So that first drop might be the ugliest. And then you might get a nice little reactive pop. Yeah, this doesn't feel very likely to me. I mean, it's moved really far before. It looks like too much, but you go back and you look at stuff like this, and it's like, that's not a long time, and it went really far down. The idea of it doing it again here is pretty simple, and it would just be like into February, which is kind of what I have. Oh, definitely not unrealistic that it could get there at that time. It's the same move. So good news about HKD, AMTD Digital, is that I think you might have in store possibly like a little move to 50% move up to about 450. And then I think it's going to dump for a while. And like a lot of things, I think it's going to come down into next year and it's probably going to move pretty far. So that's my thought. That's my genuine, like, excuse me, overall thought. Now, if the reason I think it's doing that and not like, why are you not thinking it's going to just like break out and go? Because there's not really, in my opinion, there's not much of a bottom here to talk of. Like, if this were the auto reaction, then if this is supposedly like the phase B, then this went down low right after the auto reaction, which is typically like a sign of weakness. Just 90% of the time, that's the case. So it doesn't look great from that perspective. Like, it just looks like, okay, so we have weakness here in the chart. It doesn't really make this seem like a phase B, even though, yeah, it looks like it kind of starting to change direction. I think that's because of the nature of like a distribution, like being like a hook. It's trying to like push back up to get those sellers on board, and they're taking up pretty high. I don't see a lot of evidence that you would return. They'll like keep going. What would change my mind would be if this broke out above. I mean, maybe if it went all the way up to like fives and then just kind of held and went. That's like almost like pointless to say that because it's like, well, that's just making a higher high, Booksy. Yeah, I know, but there's nothing really. I can't interpret a bullish chart if I don't think it's bullish. I can't just like see it as bullish if it doesn't seem to have that evidence. This higher low is good, but I don't think it's going to ultimately result in anything but like a secondary move, like an secondary up thrust, UTAD. Back to this top area, because I'm not seeing any kind of clear evidence that it would go beyond that at this point. And then yeah, frankly, the way these are positioned, it's looking like this is designed to be almost like a channel. So my thought is this is going to be much like this one, kind of like an up thrust above the channel. And then like this one kind of hooks below, this is probably going to hook below again. So that's a UTAD. And then it's going to slide probably pretty low. We may never get back to the bottom of that channel again, but wasted memories. I don't, like I said, I don't disparage anybody or anything like that. I definitely don't feel like it's worth bullying anyone about their opinions or their upsetness on AMC, but I did talk about it all day. I don't know, at some point you can vent all you want, but if you're not going to listen, then I don't really see the point in answering the questions. Like, it's just my personal opinion is that it's sort of diminishing returns on my part. Like, I can keep saying the same thing over and over again, and if it just falls on deaf ears, then it falls on deaf ears. I'm just kind of wasting my time. So you've already talked about GME earnings on the 10th. We already talked about what happens on GME might be a great determining factor, depending on whether or not we get a pop and drop here versus whatever going into 24, et cetera, et cetera. We've talked about AMC probably needing to back up to the 460s multiple times. I don't think it makes a lot of sense. I mean, we could hold 485 and just go. That's okay. I guess from right where we are right now, this is maybe the last ditch effort. I would suggest that this could potentially just hold and go. But I think if we drop beneath 485s again, we're probably going to go see 460. And then that's not really, in my opinion, very controversial. We may end up being around 460 or 450 by Friday if that happens. The push here is not irrelevant. It pushed resistance on this bottom. But once you push that resistance, you have to come back down and say, here's where support is. We talked about this earlier. If you push the resistance, that's great. It's good to make a higher high. You've possibly changed direction of the stock, especially after you make a leap. But then you come back and you make support. It's common knowledge in the market. It's not AMC exclusive. It has nothing to do with AMC in some ways as a company. As a stock, as a ticker. This is not AMC. This is all stocks in the whole market. If they've pushed their resistance and then they make a higher high, if they're going to hold that direction change, you have to show stopping power by then coming back down and getting support. There's always sellers on the other side of a wall. Always. What the sellers do with it is where you as a trader can determine whether it's still bullish or if it's just a bear trap or it's just a bull trap. If sellers try to sell it down and stop the advance and they can't, hence, hint, hint, nudge, nudge, you get that support and the buyers are saying, no, we're not taking it down again. You've now built support. You're ready to advance. Pure and simple. Very simple. Very basic supply and demand. Not AMC exclusive. Okay. So for us to look at this and suggest that probably needs to come back down to where this support was. If it can't hold at 485 and it needs to go down lower, we're looking at the 460s. If buyers step in and they hold it, then we're fine. And I already mentioned that technically this, if you look at a 618 retrace, it can come back to like 445. If you're not comfortable with that, then I don't know what to tell you. Like, again, you shouldn't be trading. Because the market is never just always up. It's always go up, sell, test, go up, sell, test, or go down, buy, test, go down, buy, test. There's always going to be back tests. The same thing happened on the way down here. There's pops. Those are the backups on the sell side. And the same thing's going to happen on the way up. You're going to get those drops. I don't think we're going to hold above 5 for very long. In theory, we may get a push here going into Christmas, and that's kind of where we've been at for a little while. So, patience is a choice, okay? It's not always going to feel natural. Sometimes it's not going to be pleasant, but it is the best thing for you probably. In most cases, is to practice patience. Endurance builds character. Patience is part of that. But it is a choice. It doesn't just happen. You have to choose to be patient. And if you continually choose to not be patient and to just complain, then you're not building character. You're kind of doing the opposite. Maybe. I'll check it out. Let's look at the shorter term. So one of the issues that we're going to have on AMC, it is looking like it's breaking out right here. At least it's pushing back above the localized creek. So it is breaking out of that creek. In terms of like trajectories upward, one of the issues we're going to have is it's kind of like what happened here. It may extend again, but you're going to have to check it against where it broke down. So there's a gap at 503, and there's a trend here. So it may very well be that it does break back up, but I don't know if that would constitute a breakout. Does that make sense? It's kind of just like going back up to the top. And that's as far as I would take it. Like, I don't know what would happen next. It's not because I thought it might go down first, but you have to understand, like, that motion in and of itself doesn't really mean much. I'm sorry. It doesn't to me. When I look at this, I'm thinking about what's going on some of the different levels here. I feel like it could go up and have a bit of a double top moment. I think we were talking about this on GME 2 as well. You know, there was a fella in here yesterday. He may be there, but JP was saying like he didn't think it would need to go down again. He's like, why? We've already checked these areas. We just back up and go. Here's where I would see a breakout. If on this advancement, and it would be fairly steep, I would think. Yeah, this is like right where it is. Right there in the gap. You see how that doesn't really break out of that trend. So we had a little mild trend breakdown right here, and going back up to gap fill doesn't really fix it. It just kind of like puts you right underneath it. So I think that 5 might be a bit of a headache for us right now. And we'll see, maybe it'll change. But in order for this to break out, I would suggest to you that this would need to go above 518 and then hold 510. That to me would be like maybe a breakout. Anything less than that, meh. It's just going for a gap fill maybe at 5, and then you're still at risk of coming back down before the 10th. So I'm not trying to be bearish or something. I'm just saying it can definitely hold here. I'm not saying it can't, but this is a tricky spot to be in because technically, again, it could kind of like wedge up into this corner and look like it's going to run and still drop. It's tough. Once it's made this advancement, it's kind of committed to doing something, which is good. You're either going to sell off and lose direction or you're going to hold. So I'm not going to sit here and like groan about it if it does hold at 485 and it doesn't ever go low again. So what? It didn't go low. You know, the idea of it making a bottom, it could be higher than that 462. Like could be up here around 483. It just has to hold some support once it's made that advance. In my mind, though, this doesn't look like a definite turnaround of support. It's this, in my mind, this looks like a potential hook because it lost a trend. It would have to show me that it's going to go above that trend. Otherwise, I can't really confirm it, right? This happens quite a bit where you get that push up and ultimately, without going again into the same amount of detail that we did on GME, but ultimately like this could just be like a head and shoulder, right? It's the same setup. It really is. GME has the same setup right now. Like it's got the same shoulder markings. If it pops, it may look like it's advancing, but it really is just going back to test that top. You don't really know unless it breaks out there. Otherwise, it's just like a head and shoulder. And I think AMC is much the same way on this top. It's created these shoulders, and it already came back to this first one. It's a little higher setup than GME, I guess. It's like rising instead of falling. But yeah, but you would expect this to maybe rise then as well a little bit, and it does. So if it's a complex head and shoulder, this could potentially go back up. Shoot, you could even have like a secondary move here, and then it could slide back. So that's very violent behavior, right, from a stock. Maybe going into Friday, you could be up here at 5 one more time and reject, and go from 5 all the way down, Friday all the way down to shoot, like 560 or something, you know, it's free fall. So just be careful. If it doesn't come above here today, I wouldn't be bullish. I think it's just a reaction right now, which is fine. I wouldn't see it as a turnaround. Yeah, that's my estimation of what's happening. It's probably similar to GME. So when this comes back down, there'd be some kind of weakness. Like if it pops up here, maybe the day ends, but then Thursday it starts coming down. I would wait and see if it breaks below this neckline. Then it'd be like a little bit of a weakness. It'll try to get back to 5 or something. Could be particularly weak and just not get there at all. And then probably that's it. If it's going to go down, okay? Much like GME, we talked about a couple different setups. So if you're wondering like, well, what if it does this? What if it does that? It doesn't really make any difference. You just watch it. You know, if I'm wrong and it doesn't go up high, so be it, right? Remember, we talked about the timing of this. It's just an estimation. It looked like it would be like end of the day today, but in theory, like that could be like the pivot on the bottom and then it pops tomorrow. I don't really care. Like that's not the most important thing. Whether it happens here or happens there, not a big deal. What's important is knowing where that level is up here around 30. And this is very similar to like the $5 level in AMC. And even in the history of the stock, they both hold significance, you know, for different reasons. But proportionally, we're kind of in similar spots. That's July 17th. And right now we're sitting around July and June. 17th, June 15th. We're kind of low on AMC still, I think. Yeah, we're a bit low. It's weird because it's not too far off because this is where we were around the July 19th. It was like right here. And then June 16th. Yeah, that's actually more accurate. Kind of like right there. That's where we were. So yeah, it's pretty close to what we see on GME proportionally. If you look at where GME was on the 17th of June, it was right here. So again, you know, like it may seem like they're not moving quite the same, but it's because they were set up different. That's where we were on the 17th back here. And then that's where we are now. And then if you look at AMC, that's where we were on the 17th right there. Right here. And that's where we are now. So they are in very much the same spot proportionally. We'll see. All right, I'm done. I'm kind of been ongoing all day. I went from like 9 a.m. to 1:40 my time. So I didn't get everybody's stuff. I apologize if I didn't check your thing. Sometimes I see it and I just forget about it. I didn't mean to. That's you. Ask me again and I will try tomorrow. Real quick, you asked me one of my favorite squeeze plays, MPW, but I've kind of already been talking about that forever. I'm playing around with it right now. I'm watching OBV and the moving averages on OBV. I've been messing around with that quite a bit. Right now it's on like an extended hours time frame. And it's a really similar move right here on this OBV. It's like compressing in like a wedge. It's interesting. Why is it one of my favorites and why am I calling it a squeeze play? Because it's had as high as 50% short interest in the last year. It's also consistently been around 30% short interest, which is higher than AMC, like in terms of short interest. So I think it's a really good possibility for a very strong play, short squeeze play. I also think based on the overall setup, and I'm not going to zoom out necessarily perfectly and show you, but it's got a massive widening that started up here around 20s. And I think it's valued somewhere in the middle around 10s. So there's a decent chance that it's really just creating like a gigantic wrap around the core value, and it's still going to come back up to the 20s later on and then come back down maybe to 10s to rest. It's being changed consistently with price targets. You know, most people don't think it's going to go anywhere between 4 and 5 in the next year. I think it's going to be swinging quite a bit, and I think there's going to be some really big moves. But I've also been kind of beating the same drum for the last several months, so it's a tough one. There's definitely a possibility this could come back down, as I've drawn on the chart, pretty low before it squeezes. But it has a lot of the same setup as AMC did in 2020. So yeah, for right now I'm watching the OBV to see if there's a break, because it's been pretty reliable, and this is an extended hours view. And then if you go to like regular trading hours, there's been a lot of really consistent moves here with the OBV on the moving average. Like, it's been consistently used on the 4-hour as like a possible bottom. Not always perfect, right? And right now it looks like it's struggling to kind of hold it, but it just broke above. It's divergent, basically. I made a case for it. I don't think it's going to be accepted by a lot of people. It seems a little out there, and I agree, it's a little out there. I'm not 100% convinced it's going to happen either, but I did make a case that this could pop to like 8 by the end of the year, which is pretty huge. Maybe a little bit of hopium. That's a big move. It's 100%, but it is what it is. Like, I made the case for it. It may get stopped at 5s. That's the tough one for me. I'm not sure. But I think it's very possible. And if it makes that move, I'm getting out of my positions on it. But if it goes up to 5 and it kind of dies going into the new year, I probably also exit a lot of my positions, because I think it would then come back down. So right now, there's an appearance that it could break, but then there's also an appearance that this could be like a distributive action, as you can tell, like a possible cat ear. And maybe if it gets overbought going up into this move, it would be bad. So it's a mixed bag. Like, extended hours looks pretty good. Regular trading hours, kind of a mixed bag. Waveform wise, I'm still sitting here kind of arguing that I think it's going to go up into the new year around the 30th. But I can understand why people would be skeptical of that, given its history, and it's just kind of had it false starts. I don't have any other major squeeze plays on the chart right now. I've got some that I've been in for a long time. I've talked about them periodically, but I don't typically like pump stuff. I just think it's not right. So, yeah. This is a simpler chart on my AMC side, by the way. I haven't used this one in a minute, but you can see why it's just a bit simpler. This idea that it could kind of hold and push. I was really more expecting that holding to be above 490. Right now, it's kind of parked beneath it. It looks like both of them. Like, it's between the two. It's not picking one or the other. It's like, oh, it did reject, and then it went back up. Like, all right. So we'll see what happens. This was just a different way of imagining the same things, visualizing the same ideas. But I'm still a big proponent of coming back to 460, to be honest. Yeah, no worries. I just think MPW is a easy to trade long-term stock. If you don't want to trade it option-wise, totally understandable, but it's one of the largest, if it's like up there, there's like top 5 or whatever. It's one of the largest medical REITs, real estate investment trusts, that exists in the U.S. They're based in Dallas, or not Dallas, they're based in Texas. I don't know exactly where they are. But they own like a huge amount of hospitals. And yeah, that's the biggest problem they've had this past year, was with one of their tenants. They just had a lot of tenants that were kind of defaulting and not paying their rents, basically. They fixed one of their major problems, and then they've had some issues here and there. I think trust issues with their leadership. But I don't know, man. This chart on AMC does make it look better. I kind of look at this and I'm like, kind of just looks like it's going to go. You're like, Booksy, make up your mind. Well, the thing is like when you get these backups, they do tend to look like this. They usually are like just little choppy flat M crosses. Like I actually made it look kind of flat here because that would be what I would expect. I guess we'll just see. It's gonna depend on whether this forms like a shoulder or not. It's gonna be a lot to talk about right here at 5. I think if we reject 5 and we start coming back down through 490, it'll probably be enough to confirm that it's not going to go just yet. I'm going to head low first. But in theory, and I mean, I got it here on my chart. That is one of the creeks. I kind of like bent. I don't know, man. In theory, this could just go. Wonderful, Booksy. You spent all that time talking about how it needs to come back down. I don't know. I'm just looking at it. It's the same problem, I suppose, as the other chart. You'd still have to get back above here. Like if we camped out above 5s into Friday, it might be more likely that it's just going to go next week. Yeah, I think if we made a move above like this, I think it would probably just fly. Then we may be talking about just running up into the 10th. The 9th, 10th, and 11th might be the big move days. Anywho. I think it'd be okay with the 550s, but I can't promise that, you know. There's a lot of people out there that would not agree with that, so, you know, you got to do your own DD. There's people out there that are still very bearish on AMC. They don't think it's going to run. I don't think it's going to run far, but I think you'd be okay with 550s. I think they'll probably gain some serious value. Yeah, there's a dividend, and it's decent. They keep cutting it, but if they recover, they'll bring it back. It's got huge institutional ownership, probably for that reason, but very, very high short percentage, which is important when you're talking about short squeezes. I might change my tune a lot, guys, going into tomorrow if we see something like this. You really got to watch that $5 value. All right, I got to go. I can't keep delaying it. I got to get lunch and stuff. I will definitely change my tune if we break above there like that. Yeah, that could be really strong. We're not there yet. As opposed to this move down. Good days ahead, though, at least for a few weeks. I think we're going to have, hopefully, some bull side. It would really stink if I was, like, completely wrong. It would really suck going into Christmas, like, womp, 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 womp. All those goodies are gone, you know? No tinsel. You know what bothers me? You guys ever seen that movie, The Santa Claus, and it's about the claws or whatever? It's the Tim Allen movie. I'm not talking about the sequels, which are kind of cruddy. I'm talking about like the original one. You know what bothers me in that movie? There's a lot of things that bother me in that movie, but like as an adult, right? When it came out, I guess I was pretty young. It was in the early 90s, and I liked it. You know, I didn't really criticize it or anything. But as an adult, I look at that, and one of the things that bugs me a lot, there's two things. One, at the end of that movie, there's a bunch of elves in the audience. Like, there's a bunch of elves. I don't know why I didn't see this as a kid or just didn't pay attention or didn't question it. But there's a bunch of elves that are, like, packing the street. And I don't know what they're doing. But you know at the end of the movie when, like, Santa leaves and all the neighbors are out and they're all like, wow, it's amazing. Like, more than half of the kids on the street are actually the elves. And I asked my wife, I said, why are they there? And they're like, they're just there to show support. And I'm like, yeah, but where did they come from? Like, there weren't elves. They were like the crazy like action elves who were like breaking him out of jail. They don't show up again. And I don't understand why the elves are even there at the end. It's really strange to me. And I'm like, well, do the other people see them? Because I would be really concerned if I saw some children hanging out that didn't have parents and they have pointy ears. And then at the end, they all just like run down the street like by themselves. And the cops don't even like second guess it. And if people don't see them and the elves are invisible, then there's like no one there at that last shot. It's really strange to me. I always, when I was a kid, I guess, I know it's a stupid thing to think about. Like, who cares? Booksy, it's a movie. But at the end, I always thought it was like a big crowd that saw Santa Claus, but it's really not. There's like very few people there, like regular human beings. They're mostly elves. To know that magic is everywhere. Yes. Spoken like a pure-hearted child. That's probably right. The other thing that bothers me about that movie is there's it's kind of twofold. So like they have these like weird technologies in the movie, and I think as a kid I thought it was just fun. And as an adult, at first I thought, oh, it's like James Bond, where there's like a Q, Agent Q, who like gives him gizmos and gadgets, and he's getting all these gizmos and gadgets. But they literally are talking to him like with these inventions that should have already been invented. Like they were like, here you have flame retardant pajamas so that when you fall down a chimney, you won't get burned alive. And I'm like, wait a second. You're telling me that every other Santa Claus, they're presenting it like it's new technology to the new Santa Claus. This is in the 90s. You're telling me that every other Santa Claus that came before had to deal with being possibly burned alive when they went down a chimney? They're literally shooting a flamethrower at his pajamas. And they're like, now you won't have to worry about it, Santa Claus. And I'm like, whoa, that means a lot of Santa Clauses were getting burned. Like, because I don't know where that comes from. That's literally what they say in the movie, okay? That bothers me a lot. And then when the little ninja elves come out, that's what they are. They're ninja elves. They're coming to break Santa Claus out, right? And they're kind of cute and cutesy, but then one of them says something like really nefarious, like, not all elves are there to build toys. Some of us are there to take down names or something. I don't know. He doesn't say that, but he doesn't sound like he's been smoking either for 30 years. But he's like, not all elves are like, toy builders or something. I don't know what he says. But then they have tinsel, and he says tinsel, not just for decorating trees. And they use it to cut the rebar, like they cut the bars off of the... So again, elf technology, right? They have tinsel that's literally like some kind of crazy polyfiber carbon nonsense that they make up that's like a lightsaber. It cuts through the bars. And the only thing that I could think about in my head was they just wrapped a dude up. It just made me, like, they wrapped the dude up in ribbon. And I'm like, I know they're elves and they're not evil, but why do they have that technology? And if they can magic Santa through a chimney that's the size of like a quarter and rearrange the wall, why the heck do they need to have something that cuts through like steel? Like that literally is like a wire. It just brings up all this stuff. I'm not sure why my brain was just like, what are they doing? You know what I'm saying? Like, because immediately you're like, why would you need that? That's really strange. And then, like, why are these, like, ninja elves carrying this stuff around? They're basically packing heat. They're packing something that could literally like, decapitate a person instantly. I mean, without question. I mean, it's just like, what possible use could you have for that? So I think whoever wrote the movie doesn't care, because it's a kid's movie. Who cares? It's just for fun. And the kids are like, woo, yeah, go Ninja Elves. They cut through the rebar. And I'm sure I was like that too. But as an adult watching these movies again, it's hard to like not see those things. And then like another thing that really bothered me in the movie, and I know I'm just going on and on and on. We watched it like a week ago or something, and during the Thanksgiving break. Another thing that really bothered me in that movie was they fat shame him when he starts getting fat, when he starts turning into Santa Claus, all his office workers are like, oh my gosh. And the guy who says it to him, he brings him out of the office, is like his boss. And I'm like, I don't think I've ever heard a boss tell anybody that they shouldn't be weight. But he's like, what's wrong with you? You need to get checked out. You look like the Pillsbury Doughboy. And I'm like, okay, so they played it for laughs. But he's literally in that shot. He's the same exact size as his boss. The boss that's telling him he looks like the Pillsbury Doughboy is the same exact size. Like, you could put a thumb over their faces on the screen, and they're like the same exact size. So this dude is basically just telling Scott Calvin that he's the same weight as him and he's completely unhealthy. And I'm like, dude, if you're unhealthy, if you think that's unhealthy, you need to go check yourself. Why are you judging him, man? I get it. It's a movie. It's a kid's movie. I'm roasting a kid's movie for no reason. I get it. Why are you talking about this, Booksy? Go eat lunch. I don't know. That's all. That's so funny. So what's up with AMC? Elves are cool and all. Do you like listen, or you just like come every 30 seconds or every like 30 minutes and pop in for 5 seconds? Because like I've been talking about AMC for like 7 hours. The magic only work for chimneys, duh. Claustro. Everyone knows you're supposed to put your fire out before you go to sleep. That's true. Booksy, I got a 10-minute conversation about elves in a movie 20 years ago. I'm sorry. You know, there's a lot of things like that, but maybe we shouldn't worry about it too much. Home Alone's the same way, but I don't want to get into that too much. There's some shots and there's some things that happen in Home Alone that don't make any sense to me. The biggest one is when the guy steps through the window and he crushes his feet on the broken, shattered. And to me, I'm like, he doesn't have shoes on at that point in the movie. So if I didn't have shoes on as a human being walking around in the snow, I'm going to be looking down like all the time. Like there's never an instance where I'm outside without shoes, not looking down. It's just human nature. So they play, again, it's played for laughs, but it's not hidden. They're just like strewn about the floor. He doesn't even look down. And that's another thing. I'm like, who climbs through a window and doesn't look down? Like, why would that not even occur to you? It's one of the most bothersome things in modern cinema. Clearly. Gosh, like, all right, I'm done, Mooksy. I'm done. I love it when I go into like rants about stuff and I can just see like viewership like diving off of a cliff. I just think it's hilarious. I'm easing you out of the stream, guys. We're done. We've talked about AMC all day. We've talked about this, what happens here. We're going to have to wait until 5. So we don't have any confirmation yet unless we kind of push above there. And it's possible. It just need a hold right here. And then we're going to be in good shape maybe to advance again. So I don't really worry about it too much right now. Maybe tomorrow we'll find the answer. All right, you guys have a good one. Enjoy your afternoons. We'll talk to you later.